All right. Hello, everybody. Welcome back to another episode of the Market Open. For some reason, I've been waiting here for 15 minutes, and you guys all came in late on the show today. It's 9 a.m., not 8:45 where we usually start. I don't know why you guys came in late today, but I've been waiting for 15 minutes, and I guess the stream finally has started, and you guys decided to show up. So thank you for showing up today on the Market Open, even though you guys ended up showing up late. Happy that you guys are here. No, I'm just kidding. I'm just kidding. Dude, I overslept. I overslept. I fucking overslept. If you guys followed me on Twitter last night, you saw I was at New York. I was at a dinner that I'll talk about for a little bit. And then we'll get into this red day we're seeing, which, like, dude, come on. Are we not? We were gonna get a red day. It's Friday, rebalancing of the indices. I mean, like, Nvda was at fucking 140. We were gonna get a red day. So yeah, as soon as I woke up, I was like, oh, yeah, 2472 pounds. Yeah, red day makes sense. I got to go to dinner last night with two awesome people. No, steak dinner. This is Iliano. You guys know him by now. Iliano is basically the entire reason I got to meet Carp and get into these Palantir events. He's really made it a strategic initiative to kind of include me and sort of get the company to like, see the bridge between retail and the actual, corporate side of the business, all that stuff. And then this guy, who I call Iliano a French model. This guy's like an Indian model, essentially. This guy, Hirsch Jain, you guys some of you may know him, some of you guys may not know him. He is the head of public health at Palantir. And this dude's awesome, bro. This dude is so cool. That deal we got yesterday, the ARPA deal for 20 million bucks. Hirsch is, one of the leading factors for why we got that deal. He manages that entire part of the business. So he was actually quoted in that press release, which was crazy because I knew I was going to meet him yesterday, but I didn't know we would get like a PR about public health, like a public health deal. And then when I saw his name in the actual press release, I was like, oh, that's him. So that was super cool dinner. I'll talk more about it later, like towards the end of the Market Open. However, last night was a doozy, bro. Last night was a doozy. I was supposed to get to New York, which is why I didn't do the Market close at 4 p.m. So I left my house at like 2:15 because it takes an hour to get there. I had to get on the train, all that stuff. Dude, we get on the fucking train, or I get on the train, and I hustled to get there because I didn't want to take the 3:31 because then I would get there at 4:30. I wanted to get there by 4 p.m. and all that stuff. And the train's delayed for like 2 hours, 2.5 hours. It's kind of insanity. Like, we're on the train, and I'm like, all right, so we're good to go. And then we get to the first stop, and then at New York Penn Station, if you're familiar with New Jersey, it goes from New Jersey Penn Station to New York Penn Station. There's a lot of stops in between. And they're like, there's something happening in New York. We can't move forward. And it's hot as hell. Dude, when I mean it's hot as hell, it's like there's no AC, there's no fan on this train. And I'm just sweating. I'm just sitting there. Then we finally get to a stop. They drop us off. And then the train starts going in reverse. And I was like, this is supposed to be going to New York. They're like, no. All the trains to New York are canceled. I'm like, what do you mean the trains are canceled? Like they didn't announce that, or maybe I had my headphones on and I didn't hear the conductor say it. And so I get off at the next stop, and then finally 20 minutes later, they fix it somehow. And then I get back on, and then we finally get there. So it was crazy trying to get there. That train doesn't run on Palantir, 100%. That train doesn't run on Palantir. It sucked. And then when we got there, it was a great dinner, but I ended up staying out till like 12 a.m. And so I got home at 3. And I actually was up at 6:30, bro. I was up early. It's not like I wasn't up early. It's just, I just like laid my eyes down again, my head down, and then boom, I fell asleep. So that's why I'm late. Sorry about that. But we are here. This is Friday stream, so we'll probably be extended because we always stay extended on Friday. Overall, it was a good dinner. Got to meet someone else who is very passionate about Palantir and who cares a lot about Palantir, and who manages, part of the business for them that is very important, like public health. So it was a fun night, but yeah, it was really hard getting to freaking getting to New York and then coming back. Amit needs a jet. That's what I need, bro. I need a jet. Like, you know what I'm gonna do, guys? I'm gonna get so rich one day that I buy a jet, and I'm gonna call it Netflix because I'm done with commercials. Again, even though I woke up late, you cannot deny the linguistic wordplay of my existence is just at a different level. You can't deny it. You can't deny it. Netflix commercial, you cannot deny how good sometimes I can get with the words. You also can't deny that I steal some of those lines from rappers, because I heard that in a song 6 years ago, and I never forgot about it. But like, I wish I could take full credit for it, but it's not my line. Anyway, all right, Nvidia. Let's get started with the market opening. Keep going and see what we've got right now, and then we'll talk more after the bell about everything else and what happened last night, and just like me being able to meet Hirsch and get a better understanding of Palantir. So we got Nvidia here at 127, down 2.6%. Meta's down a little bit. I did make some moves yesterday in the options market on Meta and Tesla, so I'll talk about that as well. Very small moves, but moves that I think can do relatively well, and I think that they're kind of cheap. S&P at 544. I think the S&P at 544 makes sense. Just because I don't think we could get to like 575 or something today, given, we've run up a lot in this month. I mean, this month year to date, S&P year to date. Let's see where we are. S&P not year to date, month to date. Yeah, it's up 3% this month, even with the decline. So, I mean, we were expected to see a little bit of a pullback. I think this is very healthy, actually. I would have been surprised if we woke up this morning and we're pushing 560, 553 on the S&P. Like, that's just probably not going to happen. I think the big story, though, obviously, yes, Palantir's down. We'll talk about that. Look, Palantir's down because it ran up to 26.5. Like I think, again, this is the difference between being a crackhead and buying all those calls. This is exactly what I talked about for a good 20 minutes on the market close on Tuesday. When Palantir runs, a lot of people enter the name that don't have one clue about what Palantir is. And because they don't know anything about Palantir, they're going to get in there and they're going to be like, oh, it's at 26. 26 is pretty close to 30. In fact, 26 is closer to 30 than it is to 20. Literally, it's $4 away from 30 and $6 away from 20. So I'm going to buy some call options expiring next week for $30. Or, oh, it's actually not that far away from 40. The momentum's there, could run to 40. If you are an actual investor in Palantir, look, $30, $27, these are higher valuations that are just tough to deal with if the growth is not there. Can it grow into it? 1,000%. Is it going to get there overnight like it seemingly did with getting to 2650? Probably not. And naturally, there's going to be a little bit of a retracement. So I think this is really normal. 2473, it is what it is, right? At least it's not in the 20s like it was a couple of weeks ago. But I think Nvidia is the reason for why that's happening, right? Nvidia 127, that's probably why Palantir is coming down from 26 to 130, or from 26 to 24. And we talked about this yesterday on the episode, right? On the Daily Palantir Show. If you guys were there, one of the things we talked about, as Gio says, we need a retracement. Yeah, we talked about, like, wait a second, it's not going to be that easy for Nvidia to keep this momentum up. And if Nvidia can't keep this momentum up, then Palantir is going to take a hit. A lot of people don't like the Palantir Nvidia comparison. I mean, what more do you like? Nvidia not only carries the broader market, and we saw this last night. Let me pull up this tweet. Yesterday at when did I tweet this? Yesterday when Nvidia went red, this was at 12:36 p.m. Nvidia was green for the majority of the day. Boom, Nvidia went red. The SPY was down. So if you're investing in the market and you don't have Nvidia stock, you are still investing in Nvidia, because if Nvidia goes down, we haven't seen the divergence or the breadth of the economy start to transition where Nvidia can go red and it's not that big of a deal. And the broader market can't go red, because right now Nvidia currently is the market. And so if you invest in the market, you are definitely investing in Nvidia. Isn't Nvidia's gain like 30% of the S&P 500? I think it's like 40%, to be honest. It's a lot, dude. It's definitely a lot. So yeah, I think this is let me know in the chat. Does anyone think this is an unhealthy pullback? I think it's a very healthy pullback. Different person says, should have kept my covered calls. Oh, you just reminded me. I got to text TJ because he'll probably be on today. I should have texted him last night, but I forgot. We'll send link. The covered calls, right? So if TJ joins today, which I think he will, we're going to talk a lot about covered calls, because my philosophy was, which is very similar to TJ's philosophy. And I think TJ did a really good episode on this the other day on his own channel, which is that when your covered calls are underwater, you need to be patient and you need to not start to cry about it. You need to not be a little bitch. Like if you entered into the market to sell your shares at XYZ price and you're underwater on that, if you know the stock you're doing it on and you want to keep those shares, you also should probably know what price action looks like. And if it's some random stock, then yeah, you can keep going to the moon, whatever. You don't know what's going to happen. Your shares might get called away. If it's a stock where you know the valuation, I mean, dude, yesterday they were paying $40 for a covered call on Palantir. They were giving you $1.06 a share by December. Now, look, I think Palantir can run this year, but to be worth $100 billion by the end of December, given the growth is probably still around 23-24%, that's just asking for a lot. People are willing to pay it. The crackheads come out, not just on Palantir, on a lot of stocks when it turns green. So let me just finish texting to TJ. Yeah, so 850 from. So I think when he comes on, he'll talk a little bit more about what's going on with covered calls and how we can analyze the psychology of the market, especially if you're underwater on those covered calls. Okay, cool. Thomas says, admit I've been listening to you. I've been listening to Kevin until now because of you. I demand reparations. Oh man. Well, we're live. Yeah. I woke up. It was like 8:51. I was like, damn it. Cause I was up at like 7:30. Like I was awake. So that was annoying, but like, I laid my head down again and I ended up falling asleep. Amit, you should watch the Joe Rogan podcast with Nolan Arbog, the first Neuralink patient. It can give you a better potential Palantir's TAM, I believe. Anyways. Okay, cool. Sounds good. That sounds exciting. We got a lot of stuff happen yesterday after the market opened. Donald Trump went on the All In podcast. I mean, that was kind of crazy, dude. I was listening to that on the train while my train was delayed for 2 hours. Also, yesterday taught me, yesterday gave me a better appreciation for American capitalism. Because the fact that things work correctly, people take for granted. The fact that trains work on time and that like things don't go to shit every day, that's something we take for granted. And for all the people that are like so anti-capitalism and anti I just don't know, growth and stuff, like the fact that an airplane gets in the sky and then you get down to your destination and then you find your luggage within like 10 minutes, like all of that's a miracle, quite frankly. It's an absolute miracle. And so I have a great appreciation for just like things that worked yesterday, because I felt things that didn't work and it sucked when like the train station doesn't work. So there's Trump on All In. Here's a quick clip of Jason Calacanis actually being questioned by Chamath as potentially liking Donald Trump after the conversation.
We had a limited amount of time with him, and obviously,
Cal, just say it. Just say it. You like him. You didn't. You were. Just say it. Just say it because it's written all across your face. Just say it. You like him. You're confused.
I have some blockers.
He crushed your questions. No, he crushed your questions. Admit it.
You asked tough questions. You asked great questions, and he just dealt with them head on. Just admit it. You like him. You like him. You look at him.
Well, I do like the fact that he came on the pod.
I told you you'd like him. I told you you'd like him. This is my point. Whether you come out of it wanting to vote for the president or not,
sure.
Everybody needs to, I think, just sit in a room and just hear him out.
We had a limited amount of time with him, and obviously,
I mean, it seems like Jay Cal. If you guys don't know Jay Cal, he historically is not like Trump. Seems like he ended up liking him. Look, I listened to the conversation. Objectively speaking, Trump did sound a bit more likable, and he answered the questions kind of head on. They were asked about, do you support a national abortion ban? He said, no, I support the states. And look, there's a lot of people that are pro-choice in this country, a lot of people that are pro-life. That is somewhat of a medium that you can agree on if you're in his position that has the evangelical support, but also you want to, not isolate people that were going to vote for you, but abortion was their breaking issue. He also said something about the technology sector. He said that if you graduate college in the United States and you're an immigrant, whether it's University of Chicago or Rutgers or Harvard, you immediately get a green card and you immediately get your citizenship after graduation of college, which was something that was pretty impressive. He said he would guarantee that if you go to college and you graduate and you're an immigrant, obviously we have a bit of an immigration crisis going on in this country with borders, things of that nature. But if you went to college and kind of, got educated, we want to keep that talent in the United States. And he said you would immediately get your immigration, your visa. So very interesting, dude. I mean, like he said some pretty interesting things about different sort of policy topics, which is why I thought the discussion mattered. It wasn't a discussion that was about like TMZ type of stuff. It was a discussion about like real shit going on in the world. And so that's why I thought the discussion was good. But, the question is, and again, elections affect the stock market. Is Biden going to be taking these opportunities to talk to All In Podcast, Logan Paul, etc.? Because if he's not and Trump's doing it, there's a level of distribution that's happening that Trump's getting from a social media perspective that Biden's just not getting, right? And so we're going to see how that ends up playing out over the coming months, but that's important. Rogue Trader says, I watched the podcast. I was not impressed by Trump. He did behave like an adult, but the self-congratulatory rhetoric was annoying. Yeah, Yeah, that's fair. You know, I'm sure people had a lot of different opinions, but the point is he did it. And I'm really curious to see how these presidents engage with the media. The RNC, Republican National Convention, is going to be next month, I think. Robin right here, 2175. And so that's when the DNC and RNC will officially create their nominees. And then it's going to be Trump versus Biden. And we'll see what happens. Okay, so what else do we have? So Robinhood right here, actually surprised. Robinhood's up in the pre-market. I wonder if that sustains itself. 2175. I got a message. Let me give you guys a little bit of alpha on Robinhood. So I got a message yesterday by someone who is transferring $200,000 of their portfolio, $250,000 from E-Trade to Robinhood. And when I asked when they sent me the screenshot, when I asked why, they were like, dude, E-Trade sucks. Like I just hate it. A funny thing on the screenshot is they were number 15 on the wait list to talk to a Robinhood representative. Now, when I did the ACATS transfer, I didn't get a wait list because it was only $4,000. But I'm assuming if he was number 15, it's because the 14 people ahead of him also had high six-figure accounts, and that's a big move that you're making. So you need to get on the wait list with a representative. This was a random Thursday in June, and obviously the 1% match is like going to end in June 28th for the ACATS transfer, but for the overall deposit match, it's now live for an uncapped amount. I think these June deposit numbers are going to be ridiculous, bro. I mean, these are multiple people that have texted me. They're taking six figures of their portfolios on other platforms and they're bringing it over to Robinhood. I think June's deposit numbers are going to be exciting, and that's something to think about in the context of Robinhood. Why is Robinhood down? Well, it's up in the pre-market, which I'm not exactly sure why. I think it should be down a bit more aggressively because Bitcoin is now below 64,000. So this was also a surprise I woke up to. The ETFs yesterday, absolutely disgusting inflows. I mean, the ETFs, yesterday, the ETFs lost $133 million. This is the fifth red day in a row. The ETFs are down, bro. Look at this. 226 million gone, 189 million gone, 145 million gone, 152 million gone, 139 million gone last week or this week on the ETFs. So the ETFs are definitely not helping. I guess we're going to have to see, what ends up happening with Bitcoin. I still think it's absolutely being manipulated. Let me check on the miners right now. Are they up? They are all down. So the miners are definitely taking a hit. We saw them reverse yesterday, but Robinhood's not taking that big. Robinhood's basically flat. So that's interesting. It's like the market kind of took it down as much as they could take it down with Bitcoin. We'll see how it opens, but now the market's kind of like, well, it's not really that much about Bitcoin. Like, look at that. CleanSpark's down 3%. Even Coinbase is down 3%. Robinhood's down 0.05%. Usually don't see that. Usually you see Robinhood take a dip with all the other ones, but granted, it did take a dip over the past couple of days. So I guess that dip was enough to kind of normalize at these levels, and the market was able to say, all right, that's the dip. Farzad Dax says, I started a 401k transfer from Fidelity to Robinhood. It took me over a month to get an appointment with the firm that Robinhood has hired to make this happening. Speaking to the rush on this. Yeah, I forgot the name of the firm. I think it starts with a C or something. But that firm is their third-party vendor to be able to handle all the transfers. And if it took you a month to get on the phone with them, it means, dude, these June numbers, the deposit numbers are going to be pretty tough. I think they're going to be pretty high. Tired Gang says, I moved six figures to Robinhood this month as well. Just offers so much better options to make more passive income. Yeah, I think I know sometimes we forget because it's not in the news, but Robinhood's deposits are going to be a bit ridiculous. And that's why I was defending it yesterday, saying that it's innovative. It's really hard to get someone to move multi six figures from something that's been dormant in an account for probably a decade to a new platform. I mean, most people don't even want to try to figure out what a new platform looks like. But that 1% match is too compelling, and and if you have 250 grand and you get an extra 2,500, that's a lot of money. One of the people on Twitter, the big SoFi bull. Let me actually pull up his portfolio. We'll talk about SoFi in a bit. He brought over 1.6 million to Robinhood, and he got like 16,000, and like $16,000 is a lot of money. So Josh right here, he ended up buying a lot more SoFi. He bought 15,000 shares yesterday at 625, or well, he queued up 15,000 shares at 625. So you've got people buying the dip on SoFi. Let me know in the chat if you're buying the dip. Where's SoFi right now? I yesterday got to a 52-week low of 628. Right now it's 630 in the pre-markets. People are indeed buying that dip if you are a SoFi bull. The question is just how long will the dip last? I'm starting to see some people think it's going to probably gap down to $4, and that's where it really bottoms, which has happened before in the past. I think that's when I bought my initial options in May of 2023 when it got to like $4.70. I don't know, dude. I don't think it's getting to $4 or $5. Is it possible? Yes. I think it's been so beat up, and the volume is still so high that it's very hard for me to see 20% drawdown again, unless earnings sucks. But we already know what earnings is going to be like, so I don't think that would happen. So I don't know. We'll see. Amit, why is Palantir better than SoFi? Oh, dude, I have to play this clip. I have to. So Jonathan showed me this clip from 5 months ago that I didn't. I forgot I said. I'm about to pull it up. This was like a great clip. This was absolutely the best clip ever. It was great, and like it's important because I said this. This is why I said this in January. Okay, so he sent me this clip from 4 months ago. This is Palantir versus SoFi.
4-word answer.
Hear this? Okay, hold on. Okay.
4-word answer for why Palantir is worth 46 billion and SoFi is worth 7 billion.
Now it's 60 billion or 55 billion, and SoFi is like 6 billion.
It's just a bank. That's it. It's just a fucking bank. It's a bank. It's a cool bank. It's a growing bank. It has Galileo and Technisys and blah, blah, blah. And it's like growing. It's a bank. That's it. You deposit money. They loan the money out. People lend the money. They take the money. They take the net interest and income margins from the money that they loan out and versus the federal funds rate. And then they make some money. It's a bank. That's it. Palantir is the ontological operating system, the modern fabric for the enterprise to be able to scale the infrastructure in order to accentuate and amalgamate the potentiality for an organization to actually be thriving in the modern day economy. 4-word answer for why Palantir is worth 4.
That's got to sound fun on a date, right? Palantir is the ontological operating system, but yeah, I mean, like, dude, it's true. Like, at the end of the day, for everyone who's confused, one is a bank, another one is like the ontological operating system of the enterprise. That's it. That's why one gets multiple, one just doesn't. It is what it is. But regardless, dude, I don't know if SoFi deserves to be down in this range, like on a fundamental basis again. And I'm like, I don't know that much about the fair value accounting debate and all the different stuff that like the real hardcore fintech people are thinking of. I just think on a price to book basis, if we've always valued banks on tangible book value, which I learned this year, dude, like it's not like I was an expert on this a year ago. Like this year, as I've done my research into SoFi, I've realized if it's trading a tangible book, it's trading at fair value, or even a little bit above fair value, even at this price. Whereas if it's trading like a SaaS, then yeah, it's undervalued. But is it a SaaS? And whenever you ask the bulls, it's a SaaS. They're like, well, look at the growth. I'm like, yeah, but like 20% growth is not enough, I think, to recover all of the majority of the revenue, which is lending, which is banking, to turn into a SaaS multiple on a business that doesn't have the majority of their business as a SaaS. So that's the only thing about SoFi that I think we're eventually going to see over time is where does the growth really come from in the business. But yeah, that's it. One description can be understood by a toddler. One needs a no, I think a toddler would understand my Palantir ontology definition more than the banking definition, because the Palantir ontology one, it'll resonate with like everybody in the world. Okay. Anyway, no, it won't. But speaking of Trump as well, he got $1 million yesterday by Tyler Winklevoss. So this Winklevoss guy, he was one of the first people to ever apply for a Bitcoin ETF. He also had his own Bitcoin exchange called Gemini, which I think went bankrupt. I'm actually not sure. And he actually said, if you ever watched The Social Network, that he was the real creator of Facebook. He probably was. Zuck's probably stole it, to be honest. Like if we're gonna be dead honest, Zuck's probably stole it. That's why Zuck's paid him $65 million as like a little parking ticket to get out of his way in 2007. Even though honestly he should have paid him a couple billion, because he did, like the fact that he admitted that he deserves some equity means that he probably came up with Facebook. But he just gave Trump $1 million in Bitcoin. He paid him 15 Bitcoin for $1 million. And the idea was, hey, Trump is pro crypto. Let's give him a crypto donation via crypto, right? Via Bitcoin. And let's get him elected as one of the core pro Bitcoin presidents. This is one of the, you guys know I don't watch a lot of movies. This movie I've watched like 10 times. Like I really, really do love Social Network. It was a great movie. So this was interesting to me because I mean, again, if Trump, if you care about Bitcoin proxies, Sol, your meme coins, whatever, if you care about anything crypto related, and that's where the majority of your net worth is, you're probably voting for Trump, because I don't know how you justify voting against your net worth. And now there's not a lot of people in this country that I think have their net worth in crypto, but I would say a couple million out of the 180 million that can vote. Is that enough to sway the election? I don't know. But it definitely doesn't hurt if you're a presidential candidate to have a couple million people that unequivocally will vote for you because you're going to be pro crypto. And so that can have an impact on the election. Obviously can have an impact on crypto. Like it may be, it's interpreted that if Biden gets elected, it's going to be anti-crypto for the next 4 years. And that hurts. We'll see how that plays out. But Trump definitely positioning himself in a place to get the benefit of the doubt when it comes to crypto. Cameron says I have my net worth in Palantir. Not gonna lie, I got into Rocket Lab because of a Mitt, not Maddie. How's Rocket Lab doing? It's probably struggling now that I bought it. Rocket Lab. Oh wow, it's up a little bit. Well, they did something happen yesterday? No, they had the successful Electron launches. Oh yeah, they did have their 50th successful launch on another one of their rockets. It was a live stream of their rockets. So yeah, that was good for Rocket Lab. Again, for this thing to go from $4.83 to like $10, I think it's gonna take a lot of time, a lot of revenue growth. And it's one of those things, it's going to be part of your portfolio where it's just sitting there and it's really not doing anything. And you're just early to the party and you hope the party turns out to be a very big party that's happening in space. So if you're investing in Rocket Labs, that's ultimately how you have to think about it. Any updates on Robinhood card rollouts? Yeah, I'm getting messages every day from people on Twitter saying that they're getting their card. So it's going to start coming out a lot more widely. But again, they're taking their time with it. They're trying to do cohorts. They're trying to make sure they get it out to the people that they know are going to use it, observing their data, their patterns, all that stuff. But I think it should be out for the majority of people probably towards the end of the year. Amit, are you adding to your Rocket Lab at all in the future? Yeah, probably. I want to get it to 1,000 shares. It would be like a $5,000 position or something. So I would like it to get there. But I'm in zero rush to do that. Like I just don't care that much about it. I'm excited for it, but it's going to be a part of the portfolio that's dead. Like it will stay there and hopefully will one day move up. But that's the 5,000 that I got to be ready to lose because it still is speculative in my opinion. But when I do buy it, I will let you guys know. Organic growth like Amit's hair, luscious and beautiful. Dude, my hair is wild this morning. Last night, dude, I got home late at 3 a.m. But it was a good night. We had steak dinner, we had some drinks, and like it was. We went to Peter Luger's. Does anyone know what that is? In Brooklyn, Peter Luger's. Apparently, it's a restaurant that's been around for a long time, and it was some of the best steak I ever had. It was good. By the way, I realized I have changed my opinion on steak. Medium rare is for people that are vampires and like sucking blood. I am now a medium well guy, and I think growing up is accepting that you gotta become a medium well guy. Because for my whole life, I've been doing medium rare. You know why I've been doing medium rare? Because I heard it in like a movie that people get their steaks medium rare. And I was like, oh, so medium rare. Market open in about a minute. I was like, yeah, medium rare. That makes sense. But then in San Francisco, I like asked for it medium well, and it was phenomenal. There wasn't that much blood. It was it felt like a normal piece of meat. And so I'm pretty much on the medium well train at this point. I think it doesn't make any sense to do medium rare anymore. It's just too much blood in it, dude. It's like it's not nice. You are so wrong about. Wow, you got another bad take. How is that a bad take, dude? You guys all love fucking drinking blood from a cow or something, dude. Medium rare is so much blood. Like that's not exciting to see all that blood. Like medium well is. Wow, everyone is saying I'm wrong. We're going to talk about that hamburger shit yesterday, dude. Yeah, I looked up more research on that. Absolutely surprised me. I couldn't believe it's from Hamburg, Germany. All right, 9:30 a.m. Friday, June 21st. The stock market is now open. Wake your ass up. Here we go. Let's get into the market open. 477 on Rocket Labs, down 0.52% of the day. Robinhood down 1.36%, 2143. Nvda down 3.2%. Some people wanted their Nvidia dip. The Nvidia dip is here, 140 to 126. I'm curious, who buys this dip? Do people get scared? Do they think it's going back to 100, or do the long step in? Do the hedge funds that have been pumping, dude? This is the moment for hedge funds and Wall Street that have been pumping the absolute shit out of Nvidia for the past 2 weeks. It's time for them to buy, and we'll see today if they actually end up buying a little bit. Robinhood 2460, that's down 3%. Occidental 6250, that's up a little bit. Warren Buffett now owns another 1.5 million shares, another $17 billion added to his position. AMD 161. AMD was up 6% yesterday because they got recommended by Piper Sandler as the top pick for the second half of the year. Intel at 3104, eBay 53, CRM 241, HIMS is down 2249, SolarEdge 34, Enphase down another 1% at 107. They got downgraded yesterday by JP Morgan along with the entire solar sector. Celsius is green. Celsius has had a bit of a red couple of weeks. That one's green. Everything else is red. Taiwan Semi, red. Snowflake, red. SMH, that's red. PayPal, $60. That's a little green, even though that was red for the majority of the week. Apple from 220 to 210, huh? From 220 to 210. $10 above where it's at right now. So we got Apple here at 210. Broadcom taking a little fall, down 2%. Now Broadcom still is up from the look. So on earnings day it was 1302. Right now it's 1700. It topped at 1883. So you can see this move right here. It's still up a lot, but it is down from that top of 1883, which makes sense because it just ran up a lot. Tesla 183, Palo Alto at 313, Ulta Beauty 382, Oracle 143, Robinhood again 2139. So Robinhood struggling. Bitcoin down from 64 to 63.5. So Bitcoin again taking a little bit more of a hit. SoFi 627, 626, new 52-week low, 625 on SoFi, down 1.1% on the day for SoFi now. SoFi, more sellers than buyers, apparently. SoFi getting a bit hit. ARK is down a little bit today. Path 1133, TDOC 967, Google 178, Disney 102. The market's broadly red today. And again, I just think that's so normal given the run we've had. Like, it's so normal for a Friday rebalancing. Historically, on one of these rebalancings in June is one of the, not the worst days for the market, but historically it's just like a bad day. It's in terms of the market, it's not going to be green. And so probably ends the day out a little red, and it is what it is given the run that we've had. And July tends to be better. Rebalances will happen. People probably end up buying the dip because they want more exposure, and things move on from there. But a red day is not that crazy. Yeah, we get PMI at 945, right? We get PMI at 945. June says quad witching day today. What the hell is quad witching? Quad witching refers to a date on which stock index futures expire simultaneously. That's a name. That's the name for it. Quad witching. Huh. I learned something new today. I didn't know what quad witching was. Well, thanks for that, June. Quadruple witching. Quad witching refers to the simultaneous expiration of four times a year of stock options, index futures, and index options derivative contracts. The fourth type of contract involved in quadruple witching single stock futures hasn't traded in the U.S. since 2020 and was never a major contributor to equity trading volumes. Basically, a lot of options expire today, and a lot of indices have to rebalance based on those expirations and based on the rebalancing periods that they have, which is why Nvidia and Apple might also take a little bit of a hit today, or the Nvidia dip gets bought up, which is what we're seeing right now from 125 to 128. And some other companies might continue to take a dip if people are selling off those companies to buy Nvidia. Okay, well, I didn't know quad witching was a thing. Apparently that's a thing. Where's Palantir? Palantir's taking a dip. Palantir's taking a dip. When you said quad witching, I was like, are we having the Salem witch trials or something? I was like, what's going on? What are you talking about? Quad witching. 2461 down 3%. So if you sold your covered calls, or if you like rolled them out, you're probably doing very well on those, because today obviously took a little bit of a hit. Today definitely took a little bit of hit. 2464 for people who bought calls yesterday at 2650 thinking it was going to go to 30. Yeah, those calls are underwater. Whoever sold you those calls, they're the ones benefiting from it. And again, it's just like, if you understand Palantir, you probably realize it wasn't going to go to 30 next week. Like, it could be in an uptrend, but that would be asking for a lot for a company that's 2 billion shares outstanding. And so it's going to take a little bit of a hit. Adam says, I rolled my 26 to 26.5 for the next week's, made another 2K. There you go. See, look at that. Adam collected $2,000 because someone was willing to buy 2650 calls for next week. Adam knows Palantir a lot better than most people. And he said, yeah, I don't know if 2650 is possible. And if it gets to 2650, he'll just roll out to a different strike because they'll get more excited if it gets to 2650. They'll say, oh, it'll go to 29 by the next 3 weeks. And again, you can keep getting caught on these covered calls, but if you understand the company, you probably know what the fair value should be around. And unless a company's having an Nvidia moment, which Nvidia for the past 2 weeks from 125 to 140, you have to keep rolling your covered calls. But if you kept rolling from 125 to 130 to 135 to 140, today you're at 128. And if they're expiring today or next week, you probably are able to keep your shares and keep at least some premium. So it's just one of those things where your psychology has to be ready to deal with the covered calls. People are taking profits. Yeah, 100% people are taking profits. XLK rebound, seeing a lower percentage, Apple and higher percentage Nvidia, meaning a big buy of Nvidia. Yeah, so that's the big thing. XLK, which is a tech ETF for those that don't know, this thing is going to rebalance, and it looks like they're selling off a bit of Apple and buying a bit more of Nvidia. So we might see that divergence today on both of those companies. Again, I said this yesterday on Apple. I wonder if anyone put some thought into this, but OpenAI is banned in China, which means the Siri AI model, which is like one of the main reasons I think Apple says you should upgrade. And if there's a large upgrade cycle happening in China, if there's no OpenAI attached to it, what is Apple going to use to power that AI model? I'm actually very curious. Are they going to use a Chinese company? Or is China going to allow OpenAI in this instance? Because if they don't have that, that's kind of one of the reasons I wouldn't upgrade, right? If you don't have a good Siri, like that's one of the things we're all excited about. And I'm in China, I would go with something that does have a good version of Siri. So I actually wonder what Apple's going to do in regards to that if they don't have that, if they're not allowed to be able to use OpenAI. And then, there's Baidu's LLM. Does Apple want to use Baidu's LLM, right? That's another question I think that's important. Do they want all that data going into these like Chinese companies? Granted, it's Chinese citizens' data, so I guess like all those Chinese companies already have their data and they're allowed to do whatever they want with it, but it's something Apple has to think about. SoFi right here, 627. SoFi again, still taking a hit. Meta 501, AMD 161, ARM at 157, Dell at 1. Oh, wow. Dell taking a hit. Oh, one of the Dell directors sold like $36 million of stock. So the insiders are definitely cashing out on the run that Dell's had. That happened yesterday. SoFi CTO sold like 53,000 shares. He always sells, though, so I didn't think that sell was that big of a deal. He was selling last year at the same time. So I'm not saying it's nice to see him sell at the bottom, but I mean, the dude always sells, and I don't know. People don't like Jeremy Rischel, the CTO. They really don't love him. Palantir drops after Monas Capital Heart downgrades to sell. Okay, let me look that up. Monas Capital, what's their argument? That's probably why it's taking a bigger hit. What is Monas Capital Heart? Have you guys heard of this firm before? Monas Capital. It seems like they've always been bearish on Palantir. If anyone has the research note and can send it, let me know. Monas Capital. Monas downgrade. Okay. Monas downgrade. Let's see. They said, oh, wow. So apparently this downgrade is what really got it. Dude, this is what makes me feel like corporations and institutions sometimes are pulling the strings. So apparently when Monas downgraded them at 740, that's when Palantir had their biggest red candle. They said $20 sell side. They say egregiously rich valuation, darkest days of this economic downturn are ahead of us. Okay, so it seems like this is a bear. Okay, I got it. Here we go. Here's the comments. Here's everything. A nuclear winter engulfs the software complex. This has proven to be one of the most precarious earnings seasons for enterprise software, and we believe these challenges may have more room to run. Despite preeminent SaaS vendors like Salesforce and Workday issuing disappointing outlooks, resulting in a sharp sell-off in the stocks, not even MongoDB's guidance could save the company, forcing MongoDB to reduce its full year 2025 guidance. More evidence of the challenges for enterprise software was seen in Oracle. May quarter earnings results where the last quarter revenue missed expectations. Dude, they missed expectations by like $100 million. Like that's not a big deal. Despite Oracle's lackluster results, Oracle's up 15%. What do they mean by lackluster results? The stock surged the following day, and they got $12.5 billion off 30 AI deals in the quarter. Or sorry, they got 12.5 billion, and then Broadcom got 3.1 billion. These were big deals. That was not a joke, and they were AI deals. That's the most important thing. They weren't just like software deals. Despite high-profile partnerships and accelerating RPO growth driven by LLM training projects, Aside from a precarious macro environment and shifting spend priorities, the Gen AI nirvana propagated by the enterprise software industry has proven to be revenue illusion this year. This is a stupid downgrade. This is a stupid downgrade. They don't even mention anything about Palantir. They just say that all software is going to have a nuclear winter. You can be bearish about like software companies, but if that's the reason to just like get rid of Palantir, like what? How do they justify the $40 billion valuation on $20 if they think the $55 billion valuation doesn't make any sense? This is not like a real downgrade. This is just software is going to die. Which again, I don't think that's going to be the case either. Like Salesforce has recovered from 217 to 240. Yeah, it's still down, but like Adobe did great. Oracle put up good numbers. Maybe they missed a little bit on the top line, but they put up phenomenal numbers. Broadcom also put up numbers, which fuels why Oracle is able to put up their numbers from an infrastructure perspective. SMCI down 2.4% today. I don't know. That's a weird downgrade. Could I see Palantir going back to $20? Sure. But like anything could happen, and it could definitely come back down. But this note did not say why Palantir, or at least maybe I'm not seeing all of it, but they're not saying why Palantir uniquely is in a tough spot. Now, granted, even at 26, I said, yeah, the valuation is getting up there. So like going back to 24.55, it's normal. And going back to 23.22, I can see that happening. But I don't know if software being dead is the reason for why Palantir would get hit. And if anything, I think Palantir would perform opposite to it, because software, we've seen it take a hit, and Palantir has not taken as big of a hit as some of the other companies. Snowflake right here down 0.65% on the day as well at 125. And CRM, what do you got on CRM? CRM 241. CRM is green. Salesforce is green on the day. Clive says another bear analyst trying to push the market down with BS when there is nothing to run on. Yeah, and again, you can make an argument for why software deserves to be like cut, or like why you think software companies are in a tough situation. But you got to give something more specific on Palantir. Like you just slap a $20. Like how did you even get to 20 for the nuclear winter? If it's a nuclear winter, isn't Palantir going to 15, right? Like I feel like there has to be a little bit more depth there. But it seems like that's what hit it. It seems like Moness apparently has enough influence for it to get hit. And see, you'll be at a bank and you'll be reading their notes, and because you trust Moness, you'll be like, yep, I need to sell this thing. Like it's like clockwork how this happens. God forbid Nvda gets a downgrade. I mean, I haven't seen a single downgrade on Nvda on the street, at least not by anyone reputable. Nvda right here, 127. If Nvda gets a downgrade to like 85 by like a JP Morgan, which won't happen because they need to save the market, but if it does happen, that would be a day where the entire market takes a big of a hit. The SoFi sell-off is so ridiculous. Yeah, man, it's tough, dude. It's tough. It is very tough. 625 down another 1%. The thing about the stock as well is look at the volume. It's 2.5 million. On average, their volume is like 30 billion. There is a lot of volume on SoFi every day. Like there's a lot of liquidity. But it's like the buy and the sell is so congruent with each other that you just don't have the outpacing of the buys to cover the sells. And you end up getting SoFi in this tough situation where it's just not able to move. And I don't know. It's tough. It's very, very, very tough. But right now, that's where it's at, and that's why it's struggling. Do you think SoFi will be forced to do a reverse stock split? And if so, does that affect the price? Well, if they do a reverse stock split, this thing it's going to be bad, dude. It's not going to be good if they do a reverse stock split. They can do it. They filed to do it 2 years ago, so they have the legal authority to do it. You only need to do that if you could like go below $5. So if this thing falls to like 470 and it stays there for the next 5-6 months, yeah, they might do a 10-for-1 split, get the stock up to $40 and change things, or a 5-for-1 split, right, and get it back to 20. But I don't think it gets that bad. Maybe I'm wrong, but I don't know if it gets that bad for SoFi. I think you can do a reverse split below 5 and below 1, I believe. I mean, theoretically, you can do it whenever you want. But yeah, most people do it below 1. So if they were waiting to do it below 1, I don't know if SoFi goes below $1. Okay, PMI we should be getting in a minute. That's also going to affect the market. Some quick pieces of macro news before PMI. Japan's inflation rate rises to a 3-month peak. Not the best. Canadian retail sales expected to plunge in May, which is good for inflation, but not good for the consumer. And then UK retail sales were surprisingly strong. They were up 2.9% month over month, which is good. It means the consumer is spending in the UK. But UK, the United Kingdom did not lower their inflation rate yesterday. But I just figured out I just was told yesterday, their election in the UK is happening in 2 weeks, which is why that was another reason they probably didn't lower rates, because you don't want to lower rates right before an election. But apparently that election is one of the reasons why, at least for now, they're definitely not going to lower rates. 55.1 on the PMI. All right, so that's the PMI. Let me look at the market. Let's see if we're dumping. Oh, are we dumping? I think we're dumping. Oh, we're dumping. Oh, we're dumping. We're dumping, bro. We are dumping. Why was that so bad? What was the expectation? Oh boy. PMI, this is an index around manufacturing. Oh boy. US services PMI 55.1 versus 54.8. Wow, the expectation was 53.4. Manufacturing PMI 51.7 versus 51.3. Expectation was 51. Okay, so for those that don't know what PMI is, it simply is about how much the economy is expanding from a services manufacturing perspective. There's a lot of different ways you can look at it. Above 50 is expanding, below 50 is contracting. We knew we would be above 50. The problem is now it's like aggressively above 50 in terms of the expectations, which is why the market's selling off a little bit right here. Palantir 24.27, that took a hit. SoFi 6.22, that took a hit. S&P 5.43, where's Robinhood? Robinhood 21.37. Not that big of a hit on Robinhood, but still took a little bit of a hit. Intel's down, went from 31 to 30. Coinbase 225. Bitcoin, yep, Bitcoin. Well, no, Bitcoin recovered a little bit. It's actually up a little bit, so Bitcoin's okay. And then Snowflake down a little bit as well. Palantir now down 5%. Yeah, PMI not the best. PMI not the best. Big red can. Let me see if CNBC is covering that live. Yeah, that'll do it. But also, it's perfect for the PMI to be hot on a day when, you know, the market's already tending to sell off. Like, yeah, you're probably going to get a red day, and the macro data will make it even more red, I guess. Okay, yeah, here we go. Let's listen into the PMI.
A couple weeks, they will change. In the final analysis, we're looking for all numbers to be over 50, 51.7 on manufacturing, 51.7. That means we now have 6 reads this year, all above 50, whereas last year, of course, we finished the year with under 50 reads. 51.7 is the best since March, when it was 51.9. The services side, maybe the most scrutinized, 55.1, well ahead of expectations, around 54, sequentially following 54.8. 55.1 is the best read going back to April of 22. April of 22. And finally, blend them together in the composite, 54.6. That follows 54.5. 54.6 is the best read, also since April of 22. So you do see the interest rate side moving a bit higher. Pre-opening equities should improve somewhat. On the week, very fascinating. At 472 on the week and a 10, we're basically unchanged on the week. We're down on the session. And at 425 for 10s, well, now we are about up 3 or 4 basis points on the week.
So 10-year went up a little bit. Again, that the reason in layman's terms, when PMI goes up, it means the economy is expanding a bit more aggressively, which means it'll be harder to combat inflation. That's it. And so if the market thinks inflation is going to be harder to combat, rates are going to be harder to go down, which is why market sells off a little bit. But I don't think it's that big of a deal. Wow, Palantir down almost below 24. Goodness gracious. SoFi 624, S&P 543. S&P's dip eating up a little bit. There's a red candle, but it was at 543.2, jumped all the way up to 543.93. So people took on that dip. I mean, look, the PMI is not like, oh my God, the economy is too hot. It's like, it's not the best piece of data. It'll get a little bit of a sell-off, but it's not going to be, in my opinion, sustained as like this horrible thing for the economy. Palantir below 24. It's struggling to stay above 24. 23.99, we touched it. Now back above 24 right there. For those that wanted their dip, there you go. And for those who had covered calls, there you go. Red day in the market. Robinhood recovering a little bit at 21.43. Bitcoin here at 63,000, and S&P at 543.9. All right, let's bring in the man, the myth, the legend, the guy who has been preaching for the past couple of days about how to think about psychology with covered calls. We're going to talk about a lot of different moves he's made in the $500,000 portfolio that he's allocated for me to manage, and how he thinks about covered calls. If you care about covered calls, if you don't know what a covered call is, we'll talk about that. And if you have covered calls and need a real good understanding of what the psychology should be to deal with your covered calls, especially when they go underwater, like a lot of people had with Palantir this week. Hopefully this will be a good episode to discuss more in depth. Ladies and gentlemen, TJ the Wheel Deal.
What's up, Amit? Good morning.
Good morning, sir. How are you?
I'm well, man. I'm well. I slept like a rock, dude, like a baby last night.
Have you ever had Peter Luger's in Brooklyn, New York for steak?
No, I saw it though when I lived at Brooklyn Heights, and there was always quite a bit of people there. Allegedly, it's some of the best steak in the state.
It was good. It wasn't bad. I don't know what's good. Are you a medium rare or medium well guy?
I am a more of a medium to well done. I like to make sure my cow is dead a couple of times before I stick it in my mouth.
Everyone was saying in the chat that you should be a medium rare person, and I'm like, but there's so much blood. I don't like.
Kristen's medium well to. There's one called medium plus, whatever the hell that even means. I think it's something in between rare and medium well. I don't know. I want to make sure the cow is dead, bro. Like if it's a steak, like a filet mignon, like serve it to me like a hockey puck, and I'll eat the damn thing. It's all good. I think it makes it tougher though. Like the more well done that it is, it makes it tougher. I think that's the science behind it. I'm not 100% sure, and that's correct. The red liquid is not actually blood, but it's enough to gross me out.
It's enough to gross you out. Yeah.
That's the thing. So.
All right, so TJ, we got a lot to talk about. Obviously, we made some moves in the portfolio. Before we get into those moves, I want to address the elephant in the room because everyone was struggling with it this week, which is covered calls. We usually talk about we talked about covered calls a little bit last week, but we talk a lot about cash secured puts because that's like the beginner way to get into wheeling. But covered calls is also a way to sell options.
Right.
I'll do a quick preview of what a covered call is for those that don't know, and then I'm going to set up what happened this week for myself and many people. And you, as a pro trader doing this for a while, you stayed calm as a rock. I mean, you were like just chilling this week. And I tried to take that mentality from you as well, because I thought it was the right way to philosophically deal with it. So covered calls, what are they in a nutshell? When you have 100 shares of stock in a company, you can sell a call to someone willing to buy a call. So using Palantir as an example, if you have 100 shares at a $20 average, Palantir runs from 23 to 26 this week. When it was at 23, you have a $20 average. You could say, hey, I don't think Palantir is going to be $24.50 in 2 weeks because I think that's too aggressive of a move. You can sell a call to someone, which means you have to have 100 shares to cover that call, because when you buy a call, you have the right to control 100 shares. So it needs to come from somebody. You're selling your covered call using the 100 shares as collateral to someone who's willing to pay you a premium, just like on cash secured puts, you're getting a premium to sell the put, to buy that call. And so if someone's willing to pay you $1.06 a share, that means you get $106 per contract, and you get to keep $106 yielded off of your 100 shares, which is not bad in 2 weeks, 3 weeks. And if Palantir is below your strike price, you get to keep your shares because they don't get to win the call, and you get to also keep the premium. Right. However, when you're in the money and Palantir runs up the way it did to $26.50 and your cover calls at $24.50, now you're worried about giving up your precious shares and getting rid of all that capital accumulation or appreciation that could happen if Palantir runs to 30, and the premium ends up not being worth it because, you know, the appreciation on the stock is a lot better. Right. What is the psychology, TJ, that you've had of dealing with all this stuff, and how have you played it out this week?
It's a good question. We actually covered this topic ad nauseum on the second episode of Wheelers on Wednesday. So I need to put it on a shirt for you guys. You need to know exactly what it is that you signed up for. And I'm not talking about the covered call contract literally. I'm talking about that, but I'm also talking about more than that. In other words, what was your plan when you sold those covered calls to begin with? Was your plan to have the shares called away? Was your plan just to collect premium, treating it like a rental house, and you wanted to bring some money through the door, and you're kind of playing, you know, roulette with the market, playing chicken with the market? Like, what is it that you signed up for, and what is your plan if these shares go in the money? What is your plan? Like, are you planning to roll? So you have to have like 3 or 4 scenarios already painted out in your mind, preferably written down on a journal. That way it's just very mechanical for you at that point. You're trying to minimize the level of emotions, because your emotions are going to cloud your judgment when you're in the heat of the moment. It's a lot like dating, bro. Like when a woman decides whether or not she's going to sleep with you before you ever picked her up. So she's already prepared. It's not a coincidence that she's got the pretty lace panties on. If you guys get down to business, she decided that shit at 2:00 in the afternoon when she was going and getting her hair and her nails done, guys. She planned the attack on you. You thought that you were the predator. You're the prey, bro. Like the women decide. Right? So
No, you're so right. You're so right.
You need a plan. You need to have a plan, okay? If it goes here, I'm going to do this. If it goes there, I'm going to do this. Why am I entering into that contract to begin with? And if you don't have a good answer for that, then maybe you don't need to be selling a covered call on your shares.
So when Palantir goes to 26.5, and again, we'll talk more about it as we go through some of the examples. In your head, is your philosophy, well, I don't think Palantir is going to be sustainable, therefore I can just roll out and move on? Is that what you were thinking this week?
So what I was thinking, what I'm always thinking is my shares aren't actually for sale, first and foremost. I have to put them up for sale. Contractually, I have to put them up for sale if I want to collect premium.
Right.
And I'm long these stocks. So what does that mean? Let's define that first of all. What it means is I don't have a plan to sell some of these stocks for the next 3 to 5 years. That's what being long a stock is for me.
Right.
There's nothing that can happen with the price movement that's going to want me to maybe push the sell button. And I think that is what creates the level of anxiety. So let's talk about our beloved Palantir. First, I want to address the scoreboard, and then I'll show you some covered calls that people have been dealing with, like at 25, 26, 27 for this Friday, expiring today. And I've been dealing with these messages all week. And then yesterday I posted a smart ass comment on Twitter that says, I want to make sure we can mark everybody safe from, oh my God, my shares are going to get called away from me on Palantir, right? Because y'all are just acting silly.
People were really scared.
A little intrinsic and extrinsic value. You know what I mean? But
yeah.
What is it that you signed up for? That's the thing that you have to be able to ask yourself, because you're going to get in these predicaments, dude, because we're playing price wars with the market, right? Whenever you're selling a cash secure put or a covered call, you're playing price wars with the market. Make no mistake about it. We're trying to time this during this duration of the contract. We're trying to time the market a little bit by saying, hey, I don't think it's going to go here, or I don't think it's going to go here, and I want you to pay me money for my thoughts, if you will. And the other thing is that you are emotionally attached to your shares. So again, I try to just play a game of math, leave your emotions out of there, tuck them into a closet. This isn't an episode of Dr. Phil. Like, dude, Palantir, I hate to break it to you, but Palantir doesn't give a shit that you own it. Palantir does not care about you. You care about owning Palantir a lot. And also the other fear that I have overcome probably about 3 years ago is that if for whatever reasons things got out of hand and these shares got called away from me, there's nothing to stop me from selling covered calls on that stock again and trying to get back in.
Right.
It's not like I'm breaking any laws here. It's just I created probably some tax events that I didn't want to create. So I have to consider all of the factors. How long have I owned these shares? Am I close to being from short-term gains to long-term gains? Because now I got to be a little bit more careful with this lot of shares, etc. And I struggle with CH and SH words. My bad. You know what I mean? But that's just the way that it is. So anyway, let's talk about the scoreboard a minute, and then I'll show y'all some covered calls that are kind of like in the money, out of the money, etc. And you just got to play a game of math and get out of the emotions. That's the best thing that I could advice, if you will, not financial advice, that I could give you guys. And also just know what it is that you signed up for. And I'm not talking about I just received this amount of premium to enter into this contract. Like, what did you sign up for? Why did you get into this agreement to begin with? Because that'll go a long way into helping you manage through these emotions and navigate these waters. So, Amit, this is where we're at. Net premiums collected, 44.7. How you feeling?
I'm feeling great, bro. On 288 of collateral, so we still have 132 left, or 232 left.
Yeah, and then the only thing that's not accurate is the open P&L on ShareZone. That might be more like 12 to 1,500 because I didn't have time to. But either way, we're in the ballpark as far as the open P&L, because that's a sliding scale because we're live, right? And then we scroll down here on the tickers. Robinhood's made us 16, Shop 74.45, TSLL 8,900, HIMS made us 12.50, NVDL made us 6.85. And now I want you to scroll down here to where it says shares owned. Do you see something that stands out on the page to you?
I do. I see actual ownership of equity that we have not had for about 6 weeks.
Yeah, you told me to buy 500 shares of Intel, correct?
I did. I said
And
500 shares of
do you see
Intel.
there?
I see 2,500 shares of Intel.
And you know why that happened, Amit?
Why did that happen?
You finally gave me a good fucking trade, bro. You finally gave me a stock that was in the buy zone. Like selling a cash secure put, that's cool, but we know how much we're going to make or not make there.
Right.
I wanted to position ourselves to maybe ride these shares up over the next year to $40 or so. It's sell very aggressive covered calls along the way so that we can hedge our downside a little bit. And then Intel is not going to go to $40 tomorrow. So there's not a lot of risk there for Intel to have its Nvidia moment right now, because they're a struggling company right now, right? They're trying to get it together. It's kind of like Boeing, dude. They're getting grilled right now in Congress. You know, that CEO, that overpaid CEO is getting grilled by that senator. It's comedy, bro. And I think that Intel's got some work to do before the market sentiment is a little bit higher. And then we got the 300 shares of Nvidia, and then I have the 2,000 shares of Path going. That it's got an average cost of like $12.15, so it's like we're right there.
Yeah, I mean, dude, we could keep it a part of my portfolio anyway. Like, I don't think Path goes to $7, $3. I think Path rebounds, so it is what it is. I like that we DCA'd on it. We might as well at this point, you know.
So now let's talk about the elephant in the room. So let's pick Palantir, right? Or whichever one you want to pick. Dude, I can give you guys several. Let me give you another one that's got an even bigger fan base, if you can believe it. And that's Tesla.
They have a bigger fan base than Palantir?
I think so.
What? No way.
Put it in the chat. Palantir or Tesla? Who's the bigger cult? I just think Tesla's a much bigger company. So they got, dude, if you talk to a Tesla bull and talk shit about Elon, I put on there because the superchargers in San Antonio were down, and Jeremiah had to get his Tesla towed, and everybody's calling him an idiot and this and that, and 99.9% of the time, you can't talk shit about Tesla, bro. Like I'm just like, dude, I'm only talking about the product and this one thing. My son's out $180. He's trying to get reimbursed because he doesn't make a shitload of money yet. He's 24 years old.
Yeah.
And I was like, just do better, Tesla. That's it. Do better. He's been trying to go get his damn car charged for 3 days. Wasn't able to get it done in San Antonio. And it's just a little bit embarrassing. He doesn't have a charger where he lives right now. So whenever he's in a situation where he can just plug it in like an iPhone, that's going to be different. So I just posted the facts, and then people got angry. And then he's told me, hey, Dad, don't believe the bullshit. FSD's not that close. It's not that close. And dude, my son's going to tell me the truth. He's like, it's not that close. It can't deal with constructions. It's almost killed me like 3 times. You got to be on top of this thing. Like, it's not close. It's like 3 to 5 years away, maybe longer, from really trying to figure this thing out. They've come a long way, but they still have a long way to go. That last mile is often the hardest in the marathon. You know what I mean?
Yeah.
And dude, I posted those updates as well. Screenshots, conversations between Jeremiah and I, bro, and Tesla junkies, the bulls, bro. I feel like they got little pin cushions with me on there now. So,
no, you're right. Tesla's cult is obviously bigger. I understand that. It's just they're also more ruthless.
They're unreasonable, bro. Don't even you dare tell them that Tesla's just a car company right now, because 85% of their revenue comes from selling cars. They ain't hearing that shit.
Well, also, it's an Elon cult. You know,
yeah,
that's You're right. You're right.
So anyway, so I sold these covered calls here on our beloved Tesla, my beloved Tesla. This is my favorite stock in the entire stock market. And I did this on 6/14. And it's a very aggressive call because I agreed to sell these at 185 for next Friday. And Tesla during this time, Amit, has gone up to like 187, 188 already.
Right.
So I was underwater like 10 grand at some point on this particular covered call. But I just chilled out. I was like, I got to break even of 188. You know, it's okay. I don't want to sell these calls, though. I mean, I don't want to sell these shares because I got to know what it is that I signed up for. I own these shares at 196, so it's a no-no to sell them at 185. That's a losing proposition, right?
Right.
Buying high and selling low is a very surefire way to go broke. So I don't want to do that. And I signed up for a cash grab because they paid me some decent money to get into this contract right here. I collected a cool $13,201. So I wanted to collect that premium. I had just had another successful campaign at 195 that I made about $40,000 on. So I was like, I want to collect premium. I've got a vacancy. I want to put a renter in there. So I have to enter into this contract, but I know that I'm going to get out of this contract if push comes to shove, because there's no way on God's green earth that I'm going to sell Tesla at $185 with all the potential ahead.
And just to give some context, your average is 196. So if you did sell at 185, you're losing $11 a share.
Yeah, times 2,500 is no bueno, right?
No
we
bueno.
can all agree that that's a no bueno.
And these are all your shares that you put up for sale? All of them?
Yeah, all of them plus the leaps. Because I have 2,500 shares plus 15 leaps. So I even have the Poor Man Cover Call campaign running all tied up in here. So I cannot afford to sell these shares right here, but I just put them up for sale. So I know what it is that I signed up for. Now it's going to be a recurring theme while we're talking about covered calls.
Right.
Some people treat these things like they're etched in stone, bro, and that's just not true.
Well, so I want to harp on that real quick. When you make a contract to sell a covered call, like people do with Palantir, and they see it go to 26 and their covered calls at 24, at that moment, I know you said you need to understand what contract you got into, but like, should people go take a walk or something? Like how should they deal with the fact that
what you need to do is you need to look at the intrinsic and the extrinsic value. You need to see, where does my option really stand mathematically, not just how do I feel emotionally, because those are two totally different things.
Right.
Because these options consist of intrinsic versus extrinsic value. Whenever they're in the money, they're going to comprise of intrinsic plus extrinsic value. Whenever they're out of the money, they're strictly extrinsic value. So you need to see how deep in the money you are, because you're trying to calculate the risk. What risk? What's the risk of having my shares called away before the contract expires? Because I know that it can happen on expiration date after, right? Because that's what I signed up for.
Right.
But there's nothing to stop the counterparty from exercising those shares away from me early if they want to. If it's juicy enough for them, it can happen. You follow me?
So can you show us with this Tesla example, this intrinsic, extrinsic, and why?
So this one's out of the money. So all of this options price right here, that's extrinsic value. So this is a nothing burger right now. It's just exciting to talk about, but there's nothing really here because I've agreed to sell these shares at 185, but you can buy them in the open market right now at 182.
Right.
So why in the hell would they buy my shares?
Right.
I'm just saying, just ask yourself those questions. I had a lot of people message me, oh my God, I have Palantir covered calls at 26 or at 27, and Palantir was at like 26.40. And I'm like, so you're telling me that they just want your shares so damn bad that they're willing to overpay for them? Because they can go buy them, and they can buy them in the open market for like 60 cents less, right? So I was answering questions like that sarcastically to people, but just to make the light go on in their head a little bit. Right. Like, you are battling your emotions right now. I'm telling you, get out of your emotions, suppress your feelings, bro. Suppress your feelings and just deal with the math. This contract's good for you, and the next one's going to be even better because now there's upward momentum. We're swimming with the current. We're swimming with salmon. The trend is our friend. You're about to get a shitload of premium on the next round of covered calls because there's upward momentum on your beloved Palantir. So why don't you get excited about the next round of premiums that you're about to collect? It's going to be really, really juicy for you. Instead of like, oh my God, my shares are going to get called away. Like, you act like your shares are fucking 10s at the club and everybody wants to take them home. Like, relax.
So if they stay in the money, is the idea just like roll them out a week or 2 weeks? Or how do you think of that psychology?
Good question. It really depends on what is going on with the underlying. You have to be familiar with your stock. Is there a catalyst? Is there a binary event? Like with Palantir, it was tough before they got the Titan contract because we didn't know the magnitude of that contract, right? We didn't know because that magnitude could have been 100 million. It could have been a billion. It was a big sliding scale potentially, right? Whenever they were dealing with the NHS, is that what it was called back in over there with UK or whatever?
Yep.
That was another binary event, another catalyst that we didn't really know as investors how big of a catalyst it could possibly be.
Right.
So whenever you're selling covered calls around those types of things, you have to be a little bit more careful because the market can get irrational very, very quickly as far as pricing goes. And this shit can really get away from you.
Right.
It can really, really, really get away from you. So I think the biggest thing that helps me is I'm confident in my valuations of the companies that I'm in, and I stand behind them. And, I'm here to tell all of you Palantards out there, Palantir at $30 just doesn't make any fucking sense mathematically right here, right now. It just doesn't to me. And I don't care how passionate Amit is about Palantir. If he starts screaming to me a $30 valuation on Palantir, I'm not listening.
Yep.
Because I know how to multiply a PE and the outstanding shares, etc. And we're just never going to agree on that conclusion that right here, right now, Palantir should be worth $30 a share. I'm not in that camp. I'm sorry.
So this is the most important thing to me. You're saying, hey, I know what stock I've agreed to sell covered calls on. I'm not just doing it on a random stock. And if you are, then it is what it is. The shares get called away. You probably don't care that much. But if it's a stock you care about, Tesla, Palantir, Enphase, you damn sure have done enough valuations internally to know, Tesla at 250 right now doesn't make sense. Palantir at 30
doesn't make sense at 200, bro. I mean, what has Tesla done? We're betting on the come. We're betting on the come. The reality is the growth has slowed on Tesla. I mean, just look at their PE ratios. Look at do you remember when this thing was like 1600 PE ratio?
Yeah.
I'm just saying, let's take a look at the fundamentals a little bit. Fundamentals, valuations matter.
And so at that point, if you think Palantir is not supposed to be 30, you're saying you can
right now. I don't think it's worth 30.
You're saying you can roll out to a higher strike and give yourself more time, or you can just relax a little bit because you think it'll come back down, and it's then you'll be fine with your calls.
Correct, but you got to also just look at the math. Where are you at in the contract? So let's give some hard examples, guys. So right now, there's nothing to look at. It's a nothing burger. It's out of the money. There's nobody that's going to pay me 185 for my shares because they're real shiny. They got Elon's signature on them at 185. They can go buy them on the open market at 181. They don't want my shares. It's not good for them. Why would they want my shares? If Tesla's at 200, now they can go buy my shares at 185. That's a little more compelling.
Right.
Just to give you guys context of what exactly these covered calls are. Fair enough?
Fair enough. Yeah.
So now let me show you some that are potentially in the money. We'll find one here. We'll show you all some that are all out of the money. This path out of the money, expiring at 1250.
How much premium did we get on this one? How much did we get here?
$130.
Okay, cool.
It was a 10-day trade, $130. We agreed to sell them at $12.50, so all good there. PayPal agreed to sell. I think it's 2,000 each shares, 20 contracts. Yeah, 2,000 each shares at 70. PayPal's at 60. So they're not. And I had rolled this one because I had gotten in trouble. So I had gotten $40 just to stay in the game, and now boom, I've realized all of that money. Now, granted, it's not all of that money because there's a roll incorporated there to have to actually look at the breakdown on the wheel tracker, but it's been a lucrative campaign for me so far. And then I've got another one at 67.50. And again, just start asking yourself this: why would they want my shares at 67.50 when they could go get them in the open market at 60? Mathematically, you would have to be very low on the totem pole for an IQ, right? It's starting to make a little more sense, and you probably freaked out a lot more than you needed to.
Yeah, 100%.
So I mean, dude, relax. They don't want those PayPal shares. My PayPal shares are ugly. Look at SoFi. Got 1,500 of these, 150,000 for sale at 750. Are they really going to buy mine when they can go get them in the open market for 626?
How much premium did you get on this one? How much did people pay? You still got $1,100 for this one.
You got 4,000, 1340, and 3294.
That's almost like 12 grand off 7.5 calls. That's not bad at all, bro.
Yeah, it was like 12.5 or something. It was okay. It was okay. And it was again, it started here on June the 7th. So that's a 2-week trade. And then the rest of these, I did them on June the 12th. Because I got 10 and 9 cents over here. I only got 8 cents on the first batch.
Right.
So I kind of scaled into it because I was hoping, at some point SoFi's got to run, but it just didn't happen. You know what I'm saying? And it's like, why don't you close them out today? Good question. These are all good questions y'all aren't answering. Y'all aren't asking, but I'm answering for y'all. It's because it's 1,500 shares, bro. So I got to give back 1,500. I could say 1,500. It's 1,500 contracts.
Right.
So it's, even if it's a penny a share, or a share, I don't know, I'm saying this right. Whatever, you get what I'm saying, right? So I got to give back $1,500, or I could just do nothing and let it expire worthless, and then I can live to fight another day. So another round of cover calls next week if the opportunity presents itself. If not, well, I could just leave the shares unencumbered for a little while.
And this is why I love this strategy, because you're down on SoFi on the scoreboard from a just where you bought the shares at. But you're adjusting your cost basis because you're selling these covered calls. You're collecting this $12,500, and your average on an adjusted basis gets a lot lower for doing nothing other than putting up your shares up for rent.
For sure. So I'm trying to find one that is in the money. We went over this on the Wheelers podcast. So if y'all want to go tune in, shameless plug, but it's just because there was good content there, and there's like 4 or 5 panelists talking about this, not just me.
Yeah, hold on real quick. I didn't get to watch all of it, but I caught a good 20 minutes of it the other day, and it was really good. So I'm putting his YouTube in the chat right now, guys. Please make sure to subscribe to that, and you'll get a lot more content on wheeling. Go ahead, TJ.
So here's a Palantir covered call at $12. So just forget about the expiration date. We're going to get there, but let's just look at how compelling it is for the counterparty right now. They could buy my shares at 12. It's currently trading at 24.45. So can you see how that's a legitimate risk to me? Because my shares are looking like 10s at the club at 2 o'clock in the morning. You're trying to figure out why is she still here? Somebody should have scooped her up already. You follow me?
If this was someone this week that was messaging you, they would be legit crying.
They would already own these shares. They would already.
Okay, so how are you navigating this? Because if this was someone else, they would be like, they would be really sad.
So I'm playing a game of math, because this is also an expiration date for January the 17th of 2025. And this has been a profitable campaign for me. Don't feel sorry for me, guys. I bought these shares for like $6 or $7. It's like, dude, they're there if you want them. If you let me have them for another couple months, I'll roll them. But I'm not going to give all that extrinsic value back to you right now because I know the game. So I'm just playing math. This is math right here. This is the option is going for $13. So first thing I got to do is I got to calculate my intrinsic value. So 12 from 24 is 1235. That's my intrinsic value. Then I'm going to take that denominator or coefficient and I'm going to subtract it from the options price, and that's going to give me about 60 cents in extrinsic value. Right. So if the counterparty wants my shares right now, they have to be willing to sacrifice 60 cents per share in built-in profit for wanting to take ownership of these shares early. So I'm just thinking, okay, cool. Do you really want my shares right now when you already have a contract that says you can own them at $12 on January the 17th, 2025? So what is their incentive to own these shares right now? Does Palantir pay a dividend?
No.
I can't get out of this contract right now. It's not favorable for me. So I'm locked in. I'm pigeonholed right now. I would kind of like them to call them away because now they free up $60,000 for me and I can go do other shit with it, because right now it's kind of dead money. Because if I want to get out of this situation and I want to take my ball and go home, I got to give them $64,000. Why would I do that? You know what I mean?
Yeah.
Like, why would I do that? I'm not going to do that. Like, I mean, the shares are there. You can have them. I've been in this thing for a while, dude, since July of 2023.
So you sold a contract July of 2023, assuming Palantir wouldn't be $12 by 2025.
I rolled it and I got $1,500. Yeah, I'm just a lot better at my craft now. Right. So yeah. I was just trying to hold on to these shares. It was a $10 call. And then I went from, I essentially rolled it an entire year, because I wanted to go from a $10 strike to a $12 strike, because I was going to be right at about a double. And I was like, well, if I knew that I was going to get 100% return on those shares when I first bought them, I'd have signed up for it all day long. And it was going to take less than 2 years for that to come to fruition. You're doubling a portion of your portfolio in 2 years. You're going to sign up for it all day, twice on Sunday if they let you.
And this is for 5,000 shares, basically.
Yeah, so it's quite a bit of money. And I since recently bought some at like $20 because I've kind of been trying to replace these shares because in my mind they don't exist anymore. And then I bought 10,000 shares in the $14, $15 range as well.
So what is the scenario where on January 2025 you somehow keep those 50 contracts or 5,000 shares? Is there a world?
Right. So I'm looking for a scenario for a couple of months to go off the clock, and I can collect some of this data right here. That is the scenario that I'm looking for, and I'm looking to roll these around a binary event, because the binary event, the implied volatility is going to get a little higher as well.
Right.
So then that might be an opportune time for me to roll, and then I'm trying to get to $20. That's kind of my goal.
Okay.
So I'm looking to try to be able to go all the way to January of 2026. And I want to get to $20, but I know I got to make good right now on 1303. You see that over there?
Yeah.
So
for when he says make good, for those that are confused there, that 1303, he has to buy to close.
Right.
So he needs a roll, which means he needs some more theta decay for the premiums to get higher, for him to open a new contract that creates a net credit, which means it has to be above 1303 because he's giving that back to the market.
Right. So I want to roll to 20. That's my goal. So if I wanted to do that right now, I'd have to give back $16,400 to be able to qualify for an additional $8 of intrinsic value. So people are like, oh my God, why would you give $16,000, right? Because I already know how y'all thinking, dude. Because when I was in Nvda, I used to think the same way. Like, we all have the same thoughts. You're not that original. So here's the thing. I would be willing, if I was a little bit more immature in my game, I would probably be willing to do this right now, because I'm like, well, I'm going to pick up $8 times 5,000 shares. That's 40 grand.
Correct.
So I got to give back 17,000 to qualify for 40. That's not bad. I know damn well by January 2026, Palantir is for sure, even in a shitty ass market, is going to be over $20 a share. So I know that's a winning trade for me. So I've got about $20,000 there that I could qualify for more. And then who knows, on some sort of a downturn, maybe this cover call starts printing for me. And then on the next roll, I go from 20 to 30 instead of 20 to 25. Because again, I'm long the stock. I don't want to get out of these right now. So I think here's the pain, Amit. Let's just do it where you and I are talking. Here is the pain that you're dealing with. There's a lot of you, it's my suspicion, because I used to be this wheeler too, that are selling covered calls and saying that you're long that stock. But in actuality, you're not really long, because if there's an opportunity to sell right here, if Palantir goes to like 32 or 33 bucks, you want to reserve the right to be able to sell those shares at 33 bucks and be done with it.
Right.
Whenever you enter into these covered call contracts, you kind of lose that optionality a bit. So I only sell covered calls on shares that I'm legit long on, because there's not a price that Palantir can go to right now that's going to make me want to press the sell button, whether down or up.
Right.
I'm long. So I don't care if I lose that optionality right now, because I'm playing the premium game, and then I'll really assess where I'm at in 2026, 2027. But that's just me. But if you want to reserve the right to sell Palantir, if it has a couple of 3 or 4 days, because you're essentially swing trading the stock, then you probably shouldn't be selling covered calls.
Right. I think that's the big thing. If you are so obsessed with keeping the shares and you don't understand the dynamics of wheeling it and selling covered calls, then you're going to get really emotional. It's going to be really hard for you to deal with that situation. But if you understand the elements of rolling, if you understand what it means to have theta decay on your side, and if you understand the valuation of the company, one could argue $20 is still kind of expensive for Palantir. Now, the market's probably going to give it more of a premium because Palantir is really cool. The market likes it. But if you roll it to $20 and you get another $8 of capital appreciation, and you do it in January where you don't have to pay $17,000, maybe you pay $5,000.
Right.
That's worth it based on everything you're collecting along the way. And now for the people that'll say, oh, well, what if you just bought the shares, held them, and then sold them and collected all the natural capital appreciation? Sure. But that every stock doesn't go from 6 to 25 like Palantir did in 18 months. And for the majority of stocks that don't do that, you need to be collecting income. Otherwise, those shares are just dead on a brokerage doing nothing.
Right.
Yeah, I think that makes a lot of sense.
Interesting. Let's keep going. I'm sure I'll find other examples of where people get like all paranoid. You know what I mean? Again, it's like, you have to be honest with yourself when you enter into these contracts. Looks like the market's correcting a little bit. I don't know what's going on with the actual.
Yeah. It's actually Robinhood 2179. S&P is covered. Yep, you're right.
This is a rough week. Y'all want to see a rough week, Amit? You want to see a rough week?
Woo! Ooh,
This was like 400 to the no bueno.
That's a house, bro. That's a house.
In the month, dude. Like a lot of my gains have wiped out, and I'll show y'all why. It's not because I forgot how to sell puts and calls. So year to date, still, I mean, it's okay from the money perspective, but the percentage is no bueno. The last year is still okay. It was at like 30% at one point. So I've had some drawdown, and let's talk about the drawdown. Like, what is that? So the drawdown is whenever your account's here and then it goes here, right? That's a drawdown in a nutshell. So why does that happen with my account? Why is there so much beta volatility? Is because I own a shitload of shares in a couple of companies. So if Enphase is at 130, like it was recently before these downgrades a couple of days ago.
Oh yeah. Oh, talk about this.
11,000 shares. I mean, this position was looking like 1.45 mil.
But you had covered calls on this, right? Do you still have?
I do. Yeah, I'm doing pretty okay with these.
Those are doing really well, I would imagine.
Yeah, I got about 65. So this is a little inflated because there's 3 rolls incorporated here. But bottom line is I have these shares for sale at 130 on August the 16th. Whenever this number is less than 25,000, I'll look at it. Because then at that point, I'm like, well, can I readjust it? Can I take time off the clock? I'll do things with it. But in the meantime, right now, I'm just letting Theta do its thing. I'm kind of hoping Enphase goes crazy and goes to like 140 again. Because then if it's like a month later, then I'm going to look to trim the position so that I can take some of the beta out of the portfolio.
So Enphase was at 130 like 2 weeks ago. Those covered calls were kind of underwater, and
Big time.
you kind of just let it do what it did.
Yeah, because I was okay with it because my adjusted cost basis is like 109. It's like right here.
Right.
So I was like, dude, you want to take these from me at 130? I know I bought them at 139, but I've sold so many covered calls against these shares since October when they were assigned. You know, I've been able to inch my way down. So you'd be doing me a solid, and then I'll just start selling cash secured puts on it again and try to get the money that I allegedly left on the table because I'm so damn good. You know, damn well I was going to sell at the top. Get the fuck out of here. That's the other thing on covered calls is you guys all act like you have the magic wand like Chris Patel and you're going to be able to buy at the bottom and sell at the top. Bro, your name's not Chris Patel. You ain't doing that shit. And he doesn't even do it regularly either. He picks his spots occasionally and he makes a shitload of money going real heavy on some on some asymmetrical opportunities that he finds in the market, right?
Which is that and I'm happy you bring up that point. Like I love Chris's strategy and I respect Chris. But most people cannot do what Chris does.
But I ain't smart like that, bro. I'm dumb. I do dumb shit to make money.
It's hard to find an ace. That's why I like wheeling, because it's hard to find a stock that's deeply undervalued, buy some spreads on it, and hope to God it goes up because your analysis on the undervaluation, then you make a lot of money. Also, sometimes you might do it on some stocks that aren't doing that well, like Snowflake.
Right.
And they tank. So it's like sometimes it works. A lot of times it doesn't. And if that's not the case, a more reliable way to get income is wheeling, because at least you have a stock where you actually know you can generate some alpha on.
So make no mistake, I ain't knocking what Chris does. What I'm saying is it's hard to do what he does if you don't have that kind of brain power and understanding of the macros and the sectors and everything. You got to be real smart to be Chris Patel and doing that stuff. You know what I mean? That's why it's easier probably just to sign up for his Patreon and wait for the fucking lead. You know what I'm saying?
That's true.
I'm just saying, yeah. Like, I mean, dude, he gives me tips, bro. I wait on the tips, I act on them, I make money. You know what I'm saying? Like, I mean, it is what it is. I don't know how to pay.
Yeah, but the thing is, even if you get a good tip, you have to wait for a catalyst to make that stock go higher. Whereas on wheeling, if you buy 100 shares of Palantir, you can make money today using those 100 shares with wheeling. Now, you may get your hand stuck in the cookie jar sometimes, but this whole podcast so far was about how to navigate that psychology.
Correct. So now I think we're good on the covered call, right? Bottom line, know what it is that you signed up for, know how to value your company a little bit, do some homework, and then you have to be honest with yourself. Why am I so angry? Because I'm stuck in this trade for the next 3 to 5 years? Were you long the stock or not? Because if you're not long the stock, that's where the anger occurs, because now you lose your option to be able to sell those shares at the perceived top.
Correct.
I don't have that worry because I'm legit long Palantir. So I can't answer that question for you guys.
Right.
Like, I don't know if you're a long Palantir. For me, it's very easy to sell covered calls on a stock that I'm long in, because if I'm navigating this $12 call and I'm going to turn it into 20, eventually turn it into 25 or 30, I might be able to catch up to the stock in 3 or 4 years. And I'm okay with that because I never intended to sell it along the way. I'm long the stock. And I think some people are swing trading Palantir, using that as an example, but they're saying that they're long the stock, and I'm calling you on your bullshit. You're not long the stock. You're waiting for a couple of really big green days, and you want to sell at the top so that you can say that you sold it at the top, and that's good for you. But don't hurt yourself emotionally selling covered calls against those shares, because you could get in a situation like I am with Palantir on that $12 covered call.
Yeah, and I think it's important for also, Kevin Smith says, I like the commission, but I hate getting my shares called away or losing when they go up. There are certain moments in the market, like this week, where things run up aggressively and you have to deal with that emotional pain. The far majority of the year, when you're selling covered calls, if you know what you're doing, which is not easy, but it takes practice, but you're able to get away with it, because if you know the valuation, you know that Palantir is not going to $27 tomorrow if it's at 22. You can, even if it's a little bit of extra income, you can make legitimate income. But there's some weeks where the market goes crazy and you just kind of have to sit back and be like, okay, I'll wait till things get normal. And that's it.
Right. So now let's talk about some of your plays. Okay. So we've got one of these. So we got the Intel covered call. So all these shares, by the way, they're for sale at 31 and they're already in the money. So this is one that, oh my God, this is a Palantir moment. Oh my God, my Intel shares are in the money. Oh, I mean, relax, dude. I mean, yes, they're worth 31.04, but you've got them for sale at 31. You got to account for all the premium that was collected. This was all the premium that was collected, 430 and 1900. So that forms a lot of extrinsic value in this option, because there's only 5 cents of intrinsic. So there's $1 left of extrinsic, which looks a lot like the premium that you collected. You follow me? So why do they want to give back all of that money right now just to own these shares today, when they can take ownership of these shares on 7/12? So this is just a nothing burger right now.
Right. And we collected about 2.6% of premium on this one.
Yeah, and then you own the shares. So we go here and we look at the actual share ownership, up on the shares. So you add that, whatever it was on the premiums for the covered calls. It's a very profitable campaign for us. We just got to chill out. This is where we want to be. You want to be up on the shares on a stock that's kind of beaten up a little bit. You're up on the shares, and now you're just managing this covered call. And now we're deciding how long we want to be in these shares. Because we collected 2,300 or whatever that is, right? 2,330.
Yeah.
Plus up $1,000 on the shares. I mean, that's a pretty profitable campaign on $70-some thousand worth of capital.
And quite frankly, I don't care that much about Intel. If we really had to let it go at 31, we won't. We just roll it. But
because this isn't Palantir, for you, right? So this is what makes TJ the wheel deal. They're all fucking Intel to me, Amit. I don't give a shit if it's SoFi. I don't care if it's Tesla. It's a fucking ticker that makes me money, because I own my options and my shares. They don't own me psychologically. I ain't paying them any fucking rent to take up space up here. Not doing it. I'm not doing it. Like these companies don't give a shit about me, and I don't give a shit about them. It's just a way that I use to make a hell of a lot of money. Do I want to be invested in these companies? Absolutely, I do. But if for whatever reason shares get called away and I got to build the position from scratch, I'm not going to beat myself up, dude. I'm going to go cry on my Ferrari, so to speak. It is what it is, dude. Like my emotions are very, very suppressed. I'm very emotionless when it comes to the stock market, because I saw that interview and it really hit me when Warren Buffett said that the best thing that you need as an investor is you need the right temperament.
Yep.
And I was like, I need to develop that temperament, because there's too many people getting very emotional over their positions and you could potentially paint yourself into a virtual corner that's all in your fucking head, and you can push some buttons and make some serious costly mistakes. And I'm not trying to pay for that tuition.
Yep. Let's go to Snowflake.
Snowflake, man. I've been doing a little bit of research, Amit, and I'm here to tell you, bro, I think your hate on Snowflake may be a little bit overdone because of your love for Palantir.
I've been doing research, and my hate has only grown deeper. I watched this stupid video they put out yesterday about why they're building this LLM. Everyone was on their phone in the conference, bro. They had a wide angle. No one was fucking listening to it was bad, dude. I didn't get anything from that fucking video.
So we sold these on 6/14, so we're only a week into this deal, right? And these expire on 7/19. Collected $3,400, 100 contracts, so tied up 120 grand. They paid 3,400 for a month-long trade, a little over a month, about 35 days. And it's going okay. There was a time that these things were already up at like 50, 60%. Because Snowflake had a run. If you look at the actual underlying, a week ago, Snowflake was high on the hog over here.
Yeah.
And we were up about 50% on that option. And I thought about bothering you. So I was like, hey, dude, we've already in 4 or 5 days, we could lock in about, 40, 50% of that premium. Like capture this.
Why didn't you bother me? I would have said yes. I would have been like, let's take it.
But I wanted to just kind of play it out because Snowflake is starting to look very compelling at 120. And if we could manage this trade and then maybe actually scoop up the shares at like 110, dude, I'd like to own those shares at 110 and write them back up to like 130 as a glorified swing trade and make a shitload of money.
I agree. At 110, it would get ridiculous. I agree.
It's just like, okay, dude, okay, yeah, I know that we're Palantards and all that stuff, but we're also not retards, right? I mean, you got to know a good deal when you see it. And I think Snowflake at 110 would be a pretty damn good deal. So that's just me, right? I mean, these companies better than I do, but I know good deals where I can spot a good deal. And Snowflake at 110, I feel would be a good deal.
Let's look at Nvidia. We got to look at our Nvidia.
So Nvidia, remember I told y'all both things couldn't be true at once. Do you remember when I said that, Amit?
Yeah, you said a covered call, cash secured put can't both be in the money at once.
You can't be losing on both simultaneously. It's going to be very, very difficult. So let's look at this position. So we're down on the shares 1,800 because we bought them towards the top at 132, and Nvidia's pulled back down to 125.78. So that's
at one point they were at 140 though. At one point we were up 2,400.
Right, but I mean it's volatile. Right? It's volatile because Nvidia is a lot more affordable on a per share basis for a lot of people. Nothing's changed with the valuation. In 2 or 3 months, people are going to stop talking about the 10-to-1 split that they just had.
Right.
But when I look at 132, I'm like, shit, we paid $1,300 for Nvidia. You know what I'm saying? Like, I'm just saying, like, just keeping the valuation in perspective and not being blinded by the share price. It's like we didn't exactly get the best deal on Nvidia. So what did? We immediately wrote covered calls on those shares. So we wrote the covered calls at 140 for 712 to get a little bit of a rebate, if you will. And we got 385. So that brought us into the 129 range for the adjusted cost basis because we picked up this rebate here of 1155 on our shares. So that part is going okay. We're already up 46% on those. Do you see that right there?
Yep.
And then we also said, hey, well, we like it at 132. We should probably be loving it at 125. So we entered into cash secured puts at 125. So it stands to reason since Nvidia is at 125.30 already, these cash secured puts are under pressure. Fair enough?
Yep.
So you can see that we're down 80% on those cash secured puts. So if we want to take our ball and go home and free up the collateral, we have to give back $4,221 right now, but we only collected $23.10 when we sold the cash secured put.
Right.
So you got to know what it is that you signed up for. Because conversely, just like on a covered call, your emotions can get the best of you. On cash secured puts, emotions can get the best of you as well, because you can be stuck owning these shares at 125 when you can go buy them in the open market for 115 or 110.
Right.
So that stings in a whole different way than covered calls sting.
Right.
So the risk profile is the exact same for a cash secured put and a covered call. It's just some people deal with one side of the emotions better than the other.
Okay. And then the last one we did was
So how do you
Robinhood.
feel about Nvidia right here, right now?
I think if it drops to 125, we could probably roll it out. But I think buying at 120, I am getting pretty convinced that the market is ready to pay up for Nvidia this year. And maybe next year that changes, but they're not. I don't think they're letting this sucker get to 85, 90 bucks. I mean, the macro would have to take a bad hit. Even $100 is hard for me to see, given how much the amount of firms that have upgraded Nvidia in the past week. And you could say that's a top signal, or you could say these guys are all sipping the Kool-Aid and they really do believe this is the next coming of, whatever. Yeah, I think if we have to buy it below 120, it's not a big deal at all.
So, and I think it just goes back to, again, what is it that you signed up for? Whenever we sold these cash secured puts, I distinctly remember you saying, bro, it's Nvidia.
Yeah.
And I concurred. So there's a lot of that stress that would normally be in this equation isn't in this equation, because we're not staring down the barrel of Path at $9 and I've got cash secured puts at $11. That feels a little different because we don't know if the floor could be zero on a company like Path.
Yep.
We know Nvidia, or maybe it goes down to 100. I'll go ape or ham or whatever the hell Chris says. I think he uses the term ham. It's like an 80s or 90s term. And you're going to go ape shit if it goes to more attractive, reasonable valuation levels.
Well, the thing is, for it to go to 100, you got to really ask yourself who the hell is going to sell, because the people that are up 4, 5, 7x on Nvidia, they're not selling because they understand this story better than most people. And so Wall Street would have to sell, but Wall Street's issuing as many upgrades as you can imagine. So their clients are buying because Wall Street keeps buying it. So I don't know, even getting to 100, it's going to be tough,
Agreed. So other ones that we got going, just to keep people posted on all this stuff. So this is the Path stuff that I've got. I've got 10 cash secured puts at 11. So they're not really stressing out too much. They're up 35%. And it's just because I'm trying to average down a little bit. Like I want to be in the 11 so that I can continue to sell aggressive covered calls. That way we maintain the option, excuse me, to exit this position whenever we feel like it.
Right.
And then we have the 1150 covered calls. So, because I had recently bought some shares of Path at like 1131, and I put them up for sale at 1150 to get a little bit of a rebate, if you will. So I got $390 on that. So just trying to stack premiums so that we can lower the adjusted cost basis on Path, because it's a very low conviction play, if you will. And we can look at it here. There's 2,000 shares down on the shares, and they're very low conviction. I like the average at 12.15. I give it like a C plus. Like it doesn't really stress me out, is what I'm saying. Yeah. And then we've got 1,000 shares for sale at 12.50, 1,000 shares for sale at 11.50 that I will not sell at 11.50. I would roll these. And then we have an agreement to buy 1,000 more shares at 11. So if we were to pick these up at 11, that would be putting our average over here at probably 1175-ish.
Right.
And that starts looking very, very compelling for us. In my opinion.
It's not horrible. It's not horrible.
Yeah. It's not the best company, but it's a pretty decent entry point.
Right.
So those are two different things that I just said there, right? So you can have you can make a lot of money on shitty stocks if you're able to get in, right? Like I've made a lot of money on NEO, and I don't recommend you guys investing in NEO. So what else do we have here?
Robinhood. We sold some puts on that one.
Oh yeah, Robinhood. Okay, yes, Robinhood. Where are you at, sweetheart?
2 quick things, guys. TJ's YouTube in the chat. Please make sure to subscribe to him if you're getting any value from this. Lots of valuable content on his channel, and he goes live pretty much every day. Second of all, if you want the wheeling template he uses, email amit@dailypalantir.com, and I will send you the wheeling template on Excel that he uses to track everything.
So I messaged you, Amit. Appreciate that. I messaged you and said, hey, Hood is looking a little bit attractive again. So we made some money with Hood, but then it was kind of like, now what, right?
Yeah.
Because Hood went up and we don't own any shares, so we're not participating anymore. Whenever you sell cash secured puts, the premium is all that you can get ever.
Right.
If you don't own any shares, you're not qualified for capital appreciation. So then when it dipped a little bit because Bitcoin started coming down, I was like, hey, I think selling some more contracts over here makes sense. And you gave me this trade right here. You're like, sell 50 at these levels. And that's what I did. So we collected $3,000 for agreeing to buy 5,000 shares of Hood at $20 on or before 719. and we are about even on that trade right now. So we're just kind of in a holding pattern here. What are your thoughts on Hood? Is this just all because Bitcoin is tanking? Because there's a lot of people, I heard you on the stream this morning, that are moving money over to Hood. So I think Hood overall is doing well, but I think it's just a proxy play on Bitcoin that is hurting it right now, and gave us this opportunity to make more money off of this ticker.
Yeah, there is literally zero concern I have about Hood. The reason it fell from 24 to 21 is because, look, 24 went up because it was a really, really green day in the market, right? Like it got up to 24, Nvidia was going well, all that stuff. Bitcoin going from 71 to 63 is not good for Robinhood, even though technically they make a lot of money, because when people are selling, they don't give a shit if you buy or sell, they make money. So the numbers actually won't be that bad for that. But algorithmically, it's pegged to Bitcoin. But number two is like the amount of DMs I'm getting, because June 28th is the expiration date for the ACATS transfer. By the way, guys, I think Robin is just going to extend that expiration date. They've had the expiration. That's like a Meet Kevin coupon. They've had the expiration date for a long time, but they're probably going to allow it if they're giving a 1% for unlimited deposits. I'm getting a lot of emails, DMs like, yo, I'm transferring 500K, 300K, 250K, blah, blah. The June numbers are going to be crazy when it comes to deposits. So yeah, I think Robinhood at 20 is going to be a steal. I don't know if we get there. And the only way we get there is if Bitcoin gets to like 55,000, which is possible, but I don't know if that happens.
Sure. So there's that one. And then the other one that I wanted to put on was a TSLL, because TSLL has been good to us. And we're about even on that one as well. We've got 100 contracts of 70 grand because it's at $7, and picked up another 2,900 on those, expiring on 7/12. And
So
the TSLL
what price is Tesla usually when TSLL goes to 7? Like 170?
about 150-ish, 155.
Also,
And there's not like an exact correlation there. That's a really good point, Amit. I have studied like charts next to each other, like where you can like, this is Tesla and this is TSLL, and that's not how it works, because there's a daily reset on this bad boy.
right.
So it's just not tit for tat, if you will. And then there's also this thing called NAV erosion that I don't truly or totally understand, if you will.
Right.
So, but what I can tell you is whenever you chart them, you can't like draw those conclusions. And I've got people from the hedge fund that are substantiate what I'm telling you guys right now.
Right.
It doesn't quite work that way, and I don't know why. So I'm not going to sit here and give y'all some bullshit answer to try to sound smart. I can just tell you that I know that it doesn't work that way. I don't know why. There's something called NAV erosion that I don't totally understand either. But this is what I do know. The premiums are really, really good. It's correlated to Tesla, but it is not Tesla. But they do also give you a little bit of a dividend for your effort over here if you do get stuck with these shares. And I think there's another one called TSLY, another one I don't truly understand. I don't know why I landed on this particular stock. I think it was a gentleman named Garcia and Sam Solid that introduced me to this play probably a year ago.
Yeah.
And I was just like, well, it starts making sense. I just did a little homework. I made a shitload of money off of this ticker. But again, I don't really understand it. There's an IM beneficial that seems to have something to say about NAV erosion. So
it's just from capital outflows and NAV not increasing to support it. Yeah, it makes sense. Because like if the AUM decreases on TSLL, then the net asset value won't increase just because Tesla goes up, but they lose AUM. So that makes sense.
Do not exercise Shempasta. That's what he's talking to. That's whenever you have like the poor man covered call, there's a form that you got to fill out with Robinhood that says for them to not do not exercise automatically. That way you have an opportunity to make good on shares that you owe. Like whenever you buy a long call and then you sell calls against it, you have to deliver those shares. They'll give you that option to make good versus automatically exercising your long call. So you have to have that do not exercise in play with Robinhood. And I've got it.
Where do you have to contact them to make sure?
Yeah, just contact them. They'll do it for you. They'll send you a form and you're done. They don't even bother me with it anymore because they already know the way that I'm playing the game. But you just got to communicate with these brokers. These brokers are not out to get you.
Right.
but they can't read your mind either. You know what I mean? It's just, you just got to communicate with them and let them know what you're trying to do. And I've been fighting with them over FILO and LIFO or FILO, whatever those fucking terms are. Last in, first out, first in, last out, or first in, first out. And they've got that coming here at some point.
Right.
Because I want to control what shares I sell.
Well, yeah, 100%. Yeah.
For tax reasons, but Robinhood doesn't have that at this moment. But it is something, according to what they've told me several times on the phone, it's something they're actively working on. I'm sure you can speak more educated on that than I.
Well, Vlad even tweeted it. Tax lots, they're gonna come. They're gonna come later this year. So
very cool.
Okay, so TJ,
there's that one. I don't think we have anything else that we're missing here. The only thing that I wanted to do real quickly while you're talking is I have a scheduled buy on SoFi real quickly.
Well, hold on. Why don't you, let me give you the stage. What's going on with SoFi? Because a lot of people are struggling with it. How are you navigating this? It's obviously down a lot. What's going on here?
So I'm down $250,000 on these particular shares right here. And I just think it's because SoFi is, at the end of the day, it's a bank. It has some pretty good growth behind it, but until the technological component really kicks in, like in other words, until Tesla they can prove that they're more than just a car company, I just think the market's not going to give them a favorable or a juicy premium, if you will, because they really don't deserve it. And then they're also being very conservative with the way they're choosing to play the game. You know, like it's almost like they're really bracing for a hard landing. And I think they're turning down 80% of the people asking for loans and stuff like that right now. So they're like stunting their growth on purpose. You got insiders selling. The CTO he sells every quarter, I think is what it is. And so the sentiment is really, really low. So I think that they're going to be able to deliver on Galileo. That's my big bet with SoFi. And also my big bet is on Anthony Noto. I feel like he's given us the playbook. If he's buying, I'm buying. That's just as simple as it is for me. So I want to go ahead and scoop up some more shares while we're talking, and kind of go from there. But it's a 2026 play, maybe a 2025 play, but it's always been a 2025, 2026 play for me.
Right.
Because I have very realistic expectations, and I don't want to say that I'm like super good at valuing companies or anything like that, but I have a pretty clear understanding that the one thing SoFi's been really, really good at since they went public via the SPAC is they've been really good at issuing shares. So they've been pretty good at diluting us as shareholders. And the one thing I do like is their share-based compensation has gone down a little bit to more reasonable levels, etc. But at the end of the day, they're still diluting us, bro. Any way you look at it, they're still diluting us. And then some people can make very strong arguments for their accounting practices. So they don't have a lot of friends on Wall Street right now, bottom line. And then Noto's gone and, in very polite ways, talk some shit from the standpoint that we're here to take market share. We're here to become a top 10 bank, etc. And those legacy banks own all the analysts, so they control the narrative. So I told you for the very first time that I went on your podcast that these guys are kind of like those little side teams going up against the NFL. They have a tough road to hold. But if they are able to execute, I think that it's going to be pretty, pretty lucrative. And at the end of the day, this is just a rate cuts play for SoFi, in my opinion.
So what is the adjusted cost basis on SoFi?
Mine, I just did it last night. It's $4.16.
Oh, so this 250 down
collectively.
Yeah, but that's over like 2 years, right?
Since I've been trading it since it was IPOE.
So wow, so since it IPO'd at 22, you have a $4 cost basis because of all the premiums.
Shares on SoFi were $17.50.
But all the premiums you've collected has led it to.
Yeah, because I have a hell of a rental and I put these up for sale. I would not own these shares and not sell covered calls against them. And that's another thing that I wanted to mention whenever we're on the covered call thing, right? On the covered call, I don't know, the soapbox, if you will. I can't afford to own these shares that don't pay a dividend, that aren't super solid companies yet because they're so young in their journeys, and not be bringing some money through the door. God bless you if you're in a different financial situation than I am. I cannot do that. But I'm going to take my hard-earned money, my whole life's worth, and put it into these companies like the SoFis and the Palantirs, you can bet your ass that I'm going to be bringing some money through the door some way, somehow. That's just the way that I look at it, because it's a business to me at the end of the day.
That's still incredible, though, to have a $4 cost basis, given how much it's fallen, because you
It could be more, but I went crazy buying leaps, and I thought my timing was really good on the leaps here recently, and so that cost me, over 6 figures. So I'm down on those leaps, right? Because SoFi's just not been performing.
Right.
So it would actually be in the 3s right now had it not been for those leaps that I just recently purchased. But I think they're all going to pan out. It's just going to take time, though.
Well, dude, I mean, it's beat up. If this earnings goes well, I think back to $8 is not crazy at all. Like,
agreed.
Or even 7.30, which is still a hell of a lot more than 6.30.
Yeah, no, for sure.
And then things change.
But that's just. But I wanted to pick up 10,000 shares real quick. So.
Okay, there you go.
So we'll get that done at 627 would be nice. There it is.
Wow, that was quick. They gave it to you.
Yeah. So now we'll see how it looks.
Are you gonna sell covered calls on it right now? That could be 100 contracts, basically.
Yeah, no, I'm gonna wait until these expire. That way I don't have one less contract to manage, because I don't think I'm gonna go 750 on the next round. I think I might go as aggressive as 650.
Oh, wow.
Where SoFi is, because I want to bring some money through the door. So that would be 1,600 contracts. So we can fantasy land it a little bit. That's what I call it. So I may look at 2 weeks out and see how much I can get at 650. That looks a little compelling, because that would be 1,600 contracts plus all the leaps. So that's 19 grand. And then I've got all the leaps as well that I could throw in there, which is 200, 200, 200. So another 6. So 2,100 contracts total is what I could technically do. So that would be, I wouldn't mind getting caught with my hand in the cookie jar on that if they gave me this much money up front. So I got a $25,000 bill to look forward to next Monday. So that's just, again, I keep my eyes on the cash flow, right? The cash flow is like the heartbeat of any business. And to me, the premiums are the cash flow, because it's going to take 3 to 5 years for these investment theses to play out, either in my favor or not in my favor. But in the interim, I'm not going to be broke. I'm not going to go broke just following the market. And my emotions are going to be real high when things are good. They're going to be real low when things are bad. I need to be bringing money through the door regardless. And again, I'm just not playing a game of emotion. I'm playing a game of math. So
two things real quick. Douglas, thank you for becoming a channel member. Really appreciate it, Douglas. So thank you for being a channel member. Second is, what would your average be without the wheel premiums, TJ?
Yeah, so it was the average cost of the shares, right?
Right, gotcha.
Let's look at it right here. I don't know, because it just adjusted right now. So I'm at 774.
Got it.
So I'm trying to buy to get to 750. That's the goal.
Yeah,
but I also want to do that and not have more than 200,000 shares in this account. So I'm kind of picking my spots. I'm really hoping I don't know that SoFi warriors aren't going to want to hear this. I'm hoping SoFi tanks to $5 or so, because then I can scoop up the other 30,000 shares down there, and that'll definitely bring me below 750. I think, if the math serves me. And then I'll write them up, because at that point it could go from 5 to 6 overnight, because it'll be such a juicy deal that everybody that's talking shit about SoFi, they're going to want to get in, because they know at some point valuations matter on the other side too, and they will be on their third quarter of GAAP profitability, etc. It becomes a very compelling opportunity in the $5 range. I think right now it's attractive, but it's still not no-brainer shit. I think in the $5 range, it's no-brainer territory. Yeah. So, but again, you got to be willing to endure the pain if you want to go get the gain, right? So but everybody just wants the good shit the market offers, but that's just not the way that life works, man. Are we good? Did you learn anything? How's this experience been for you? Give me a couple of minutes, and then I want to ask you a question, because y'all took away some of my favorite pastime here recently, admit.
We took away your favorite pastime? About what?
What the fuck happened with the junkies, bro? Just between me and you, just a couple girls talking and pillow fighting and bras and panties.
In front of 700 people. I actually talked about it.
Possibly tell me y'all couldn't keep that shit going.
Well, real quick, I'll say on the cover call thing. Yeah, I actually kept my cool this week because I had 25.50 covered calls. You know what I did? I actually rolled in to 25 because I also felt it was getting a little ahead of itself. And I felt if Nvidia took a breather, Palantir would take a breather. I was kind of being like you. I was like giving a little bit of a lecture to people on Monday when I was getting messages as well about covered calls. And I was like, guys, like, we know what Palantir is supposed to be worth. Worst case, it runs to 34, 35. We'll roll it out to 40, 50 because some crackheads will be willing to pay us crazy. So in my head, I was very zen this week. And I think I learned that from you because I remembered in those moments when I saw my covered calls underwater, I was like, well, TJ wouldn't be freaking out right now. So why am I freaking out? You know?
Right.
So yeah, I think it was, and I hopefully a lot of people got a lot of psychology from here around just like how to navigate that position and what you get into when you buy. I did call rolling the eighth wonder of the world. Don't you think it's this magical thing?
Ninth, bro. Compound interest is the eighth. So
there you go. Compound interest is the eighth. Yeah. In terms of junkies, I talked about it on Monday on the market close, but it's just like we just don't have the time to do this thing. Vitaly literally couldn't make the last episode because he has this new job, and he wasn't able to make the show. He's going to be gone for the next 8 months recording. Chris works overnight. He gets really fucking busy at the end of the day. I do 2 streams a day. Like, it's just getting to the point where all 4 of us were not aligned on the consistency of it. And it's hard to do a fucking show at the end of the day at 10 o'clock when everyone's tired, you know? As Chris says, people didn't hit the like button enough. So that's what broke up the band. But yeah, look, I know a lot of people are like, oh, you're giving up so much potential in the show and there's all these people that loved it. I get it, dude. But at some point, if you can't deliver on the promise of creating the content, then in my head, I'm like, well, if we're not actually executing, then once a month doesn't do it for me. Like, I go all in. Like, for you, your shares have to be put up for rent. If I'm doing content, I'm taking it seriously. There's a reason I stream twice a day on this channel. There's a reason I tweet a trillion times a day. Like, I'm in that zone. If I'm not in that zone for something that's content related, because we can't do it consistently.
So are y'all gonna do it like for big events and stuff, like earnings or whatever?
Maybe,
like maybe once or twice a month, or no?
As of now, there's no plans to do that.
Maybe. But isn't that channel? I mean, because I have a channel that's about the same size as the Finance Junkies channel, and it's starting to generate revenue. Like, wasn't there a little revenue already being generated with the Finance Junkies?
We made like $250 to $300 a month, split among 4 people.
Okay,
not so, like
yeah. Well, I mean, for you that might mean something. That ain't gonna mean shit for Vitaly, Carlos, and Chris. People, I also need to understand that Vitaly, Carlos, and Chris, you know, they make money. so it's a big ask for them to give, you know, 45 an hour of their day on a daily basis. And so anyway, I'm grateful and appreciative that they had that for a while because it kept me up to speed. It kept me up to speed on a lot of things and gave me a lot of different unique perspectives and takes on the market that I otherwise wouldn't have. So I'm glad y'all kept it going for a year or however long it lasted.
Yeah, TJ, sorry, my charger port, apparently there's like something stuck in it and I can't get this charger in.
No worries, man. I was just telling them that I got value out of the Finance Junkies and it really kept me up to speed and got a lot of I got a lot of good tips, man. Like, Vitaly looks at the market so differently than Chris, and because Vitaly's a fucking straight up gangster ass investor that will take profits to go buy a fucking pool. You know what I'm saying? Like, and then Chris is a fucking sniper. He sees opportunities and he goes balls deep and makes you know, a shitload of money wherever he plays. And then Carlos just real consistent. Like, he has his little Bitcoin hodl that he's got working, and he has a plan and he's executing his plan, but he's very well versed, very well spoken. Y'all made a good team. You know, you made a good team, but
I mean, I agree. And a lot of people said that, but again, if you can't do it consistently and you can't grow it, it's kind of like, it's not worth it with content.
No, I hear you, man. Cause I have the wheelers that I do a couple of times a month, and it's starting to take off. Like, that podcast does the best for me, but it's also on the same channel that I do all the other shit in. So I think that's what's tough for you guys, is that everything was like all separated.
It's fragmented.
There's also freelancer finance that Vitaly and Carlos have as well, and that's a little channel that they got going. Yeah. So yeah, I think it's tough, man. I think it's tough, but appreciate you. Want to do a word of the day, brother? Because I gotta get rocking and rolling too.
Yes, sir. I'll be back, guys, for the market close. Word of the day. Oh, this is an interesting one. Diffident.
Huh?
Diffident means
Diffident.
lacking. Well, TJ, you are definitely not diffident. You don't lack any self-confidence. That's for sure. You're not shy. That's for damn sure.
I do when there's a bunch of hot, wealthy guys around my wife. I get a little diffident. Like
Dude.
that fucking CEO from Nubank. Fuck that guy.
I love how you'll never buy Nubank because you don't
Fuck
like.
him. Nah, he's good looking dude. He's well spoken, bro. Comes from a pretty legit family. It's all good, dude. My wife picked me, bro. Like my wife picked me, and he was too fucking nerdy. She was going out with the fucking linebacker on the Stanford team at the time. That guy didn't have a fucking chance with Kristen in college. So
Dude, the thing is, no matter how much someone is above you in life, if your girl picked you, I mean, what can they really say? Like, I won, bitch. I'm the winner here. Like,
yeah, but they were never anything. They were just acquaintances from a couple of econ classes. Because my wife's an econ major at Stanford.
yeah.
And for those of y'all that don't know, David Velez, he graduated from Stanford a year before my wife did. And whenever like people like are on the econ and stuff, like it's a very tight knit community. It gets a real hard major there and stuff.
Yeah.
But it's all good. Yeah.
Oh, you won.
I
got her. You got her. I love it, man. This was awesome. This was great. Hope you guys got a lot of value. Again, one more final shout out. If you are not subscribed to TJ, please. Also, by the way, TJ, I was going to tell you this. I don't know how TJ is doing it because it's not easy to do it. And I know it because I'm in the thick of things. TJ is growing pretty aggressively on Twitter. TJ's at 4,000 followers in like a couple of weeks, dude. I thought you were at like 1,000. So if you haven't followed TJ on Twitter as well, make sure you're there. He tweets a lot about.
I didn't even know that. I don't even know how to pull up that shit at times. Yeah.
Well, this is how love he is with his wife. Look at that. But there you go. Sell, put, sell, calls, collect premiums. If you want value in text-based format, short little thoughts, please make sure to follow him on Twitter as well.
Appreciate you guys, man. Appreciate all the love. I appreciate all the comments, the good, the bad, the ugly, and the indifferent. At the end of the day, we're all here to just try to be better at the end of the day. I don't think I'm any better than anybody in the chat. I'm just trying to figure this thing out, same as you guys. I just happen to be pretty open and transparent about it.
I love it. Any pause this weekend? There might be one on Sunday, but I will let you guys know. And I'll be back on the market close. Thank you, everybody. Have a good one. Thank you, TJ. And we'll see you guys back at 3:45.
Take care, guys. Appreciate you.
Have a good one.